dude, how y'all feeling? How y'all living, baby? Welcome back to the stream. Welcome back to the stream. Welcome back to the stream. Look, we gotta fix it, twin. We gotta get live on YouTube. Come on, what do we do? 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 What do we do, baby? We gotta get live on YouTube. What is good, my boys? What is good, my boys? What is good, my boys, gals, everybody in between? Welcome back to the stream. Welcome back to the stream. Welcome back to the fucking stream. Wow. Man, what a weekend. What a... Oh, it's live? No, say it ain't so. Ah! Let's go, man. Let's fucking go, man. Hey, someone check me real quick and tell me if we're live on YouTube. Welcome back, man. Welcome back to the fucking stream, dude. Thank God. Alex and GMI, I appreciate you. Man, what a weekend. What a time to be alive, my friends. I mean, look, I'm going to try not to do too much spoiling of the intros because we have a ridiculous amount of stuff to talk about today. So I'm going to try not to do too much. Your dog died yesterday. Damn, I'm sorry to hear that. If that's true, Pokeball, I'm really sorry to hear that. RIP, chat. RIP, dog. For real. I'm sorry to hear that. That's fucking awful. First of all, mic check. How's my shit sound? My mic sounds better? Is it better? Is it smoother? Does it sound crispier? Because I got a new mic. Shout out to Malcolm. Got me right. Got the setup dialed. Got everything ready to go. So look, I had a sick weekend, an eventful weekend, and like a learn heavy weekend. I learned a lot this weekend. So I'm going to do my best to keep it short, keep it sweet, and then get into what we have to talk about today. Because let me go retweet this thing on Twitter. Today's an important stream, I'm not going to lie, because twofold. One, Citrini came out and wrote this article that, brother, my God, destroyed the stock market. I think $50 billion is the number that we're running with on the stock side. Evaporated out of thin air on his AI doomer article. Now, what's funny about his AI doomer article is a lot of the concepts that we've been talking about, I feel, for a couple months, really all through 2025. And it sets the stage for, I don't know, some crazy fucking discussions. And then second fold is the AI arms race, etc., is accelerating fast. Anthropic came out. They said that China's distilling their models at the same time. DeepSeek is about to drop. There's a lot going on right now. There's a lot going on. Anthropic makes a tweet and destroys IBM and nukes these stocks 15%. Basically, the entire world right now is trading like cryptocurrency, and we're just early to it, man. We're fucking early to it. So we have a lot to talk about today. We have a lot to get into today. I'm going to keep the intro short and sweet. 10 minutes, okay? 10 minutes from when I say go. Before I say go, roll call! What's good? Who's in here? Viblet's in here always. Caleb's in here always. Meatball's in here always. Kevin's in here always. Jonah's in here. What's good? Stone's in here. Jackson Ray's in here. Proof of Work's in here. Mac D God's Recto Glizzy's in here. Yonan is in here. Zell's in here. Rug's in here. Digi's in here. Palm Beach Trader in here. Any first time chatters? Crypto DJ Life's in here. Coffee's in here. Teo's in here. Thanks for the gifted. Alex, thanks for the gifted. Thank you. 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 Welcome. 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 The iRoll Toolkit. Hen Dog, what's good, baby? iRoll Toolkit looks good. Thank God. We're live on YouTube. Thank God. We're live on Twitter. Thank God. Everything is clean. Everything is crispy. Everything looks nice. And man, the world is moving crazy. We got a lot to talk about. Okay. Let's set the tone today. Let's set the tone. Everyone sit back. I got a 1:45-second video for you. Let's set the tone for what I'm on today on stream. Digimuddy, thank you for the gifted 9 months. Subscribe for 9 months. Sit back and enjoy this one real quick. Let's set the tone a little bit. Lost your virginity today. Congratulations, bro. It's huge. Congratulations. That's awesome. Sit back and watch this one.
The year is now 2026, the era of AI. There are those who believe that this is the age where everything is possible. So if you had an idea for a startup, a movie, an app, you can go do that. But there's a problem. There are those who think AI is ruining everything.
Fuck AI.
You see, this takes us back to a similar time period, where the year is 1987, and if you wanted to make music, it was nearly impossible. You had to go to music school, you needed to have instruments, and if you didn't have access to a studio, then you couldn't record your music. But all this changed when a company in California released this, the SP1200. And what happens next is the birth of a new era, the era of sampling.
Y'all wanna know how we make the music? We sample. You hear that?
It's when you take a part of an existing song, like a drum, melody, or a vocal, and remix it into something new. It's how some of the greatest artists of all time were made, and one of the most recognized is none other than Kanye West. You see, even though Kanye didn't invent sampling, his work was undeniable, attracting millions of listeners and inspiring hundreds of new musicians. And all this started from sampling beats right out of his bedroom. So let's go back to the year 2026, where instead of a teenager sampling music in his bedroom, he's vibe coding on his laptop, a new form of expression, much similar to what Kanye did as a kid, but instead of sampling music, he's sampling software. So that brings us to one question. If sampling had Kanye West, who will software have in this era?
Wow. I mean, how could you not be optimistic about the world that we live in right now? Seriously, we can do the doomer and we can get scared about certain things and we could feel all types of ways, but how could you look at what is possible right now and not be excited? Because man, the bottleneck is no longer language. It's no longer knowing how to code. It's no longer this niche verticalized skill of can you write in a different language. It's how well can you think? How much agency do you have? And are you down to make yourself look like a fucking fool? And if you're willing to do those, man, it's just the era for you. Like, it is the worst time to be alive, to be a really high IQ, low agency person. The best time ever to be a low IQ, high agency person. And if you got both, it's just that time, man. Like, you can't watch that video and be like, all right, I wish I didn't know about AI, or I wish I wasn't born in this time frame. It's like, no, it's the sickest time to be alive. Strap up your fucking jeans, pull your pants up, and let's set up your OpenClaw and let's start building some shit, man. It's the best time in the world to be alive. And so shout out to Kanye West's software, whoever that may be. I hope it's someone in this chat. So look, we'll get there in a minute to a lot of this AI stuff, because trust me, this might be a long stream. Before we do, I want to tell you a quick story. Okay, let me sign in real quick. I have a story for you guys. What'd you guys do this weekend? Anyone do anything fun this weekend? Before we get too far, anyone do anything fun this weekend? My new thing is like, I'm trying to life max on the weekends a little bit, right? I'm trying to fucking like go out, rip a little, do whatever I have to do. David, let me sign in. Hold on, let me get this right. And so, made money short in crypto. Fuck. Wait, let me try one more thing. Let me try one more thing. Because I want to show you this. I need to show you a visual to get this right. Rip a little bag. No, I don't do that shit, but you gotta do what you gotta do. All right, I'll have to save the clip for the end then. This PolyMarket isn't really working. Rocket. Let me see if I could. Yeah, PolyMarket's not working. Let me sign in, but I want to tell you a story real quick. It's a good story. Fuck. All right, look, I'll just tell you the story, and then we could clip it accordingly. But so I went to quick story time. I don't ever bet on sports, but it was Saturday. We were bored, and I wanted to go out and do something. And so me and the homies went to the Rockets in Knicks. Knicks in Madison. I've never been to the Garden. I went to Madison Square Garden. Went to the Knicks game. And you could just go to the Rockets page. Yeah, it's not working, though. I could just show, like, a weird... I don't know. I think it's my I'm getting throttled. Hey, DNAP, send it in the chat real quick. Twitch chat. Quick story. Send it in the Twitch chat. Real quick. And I'll pull this up, I'll tell you the story, and then we'll get into some real topics. This Citrini thing is gonna be a little gnarly today. There you go. Thank you. All right, okay, watch this story. So we wanted to do something this weekend, and so we went to the Knicks game. And one, I've never been to the Garden, so I wanted to go to MSG. And then two, I'm a huge NBA fan. Three, KD's fresh off the KD files. And so we go to this game. Me and the homies are watching the game. It's a fun game. And then pretty quickly, Rockets are down like 10 in the first quarter. I checked the line, and Rockets are 30 cents. And I'm like, let's bet. And so I took $1,000. I bet on the Rockets at 30 cents. By the start of the third quarter, the Rockets are up like 15. They're at 70 cents. I sell it, 1K into 2.3, 1.3K profit. And my immediate response is like, all right, let's bet on the Knicks again. And so I bet on the Knicks again at 30 cents. I bet $1,000 on the Knicks at 30 cents. I have 300 profit. If I win, it's awesome. If I lose, I still have 300. Paid for the game. Like, we're happy. The Knicks proceed to lead one of the greatest comebacks I've ever watched. Okay, it got as low as 10 cents for the Knicks to win. I bet again on the Knicks. I bet the other 300 on the Knicks, so I have no profit. It gets as low as 9 cents. The Knicks run it all the way back, and they're down like 8 with 3 minutes left. Brunson bucket, Towns 3, Brunson bucket. Knicks are up to 97 cents. I take P. I'm up 5.5K betting both sides on this game, and so. Watch what happens at the end of this game. I'm gonna give you the scenario real quick, okay? Knicks are up by 2 with the ball, 5 seconds left. They inbound. Shamek goes to the free throw line, up 2 with the ball, 2 free throws. Rockets are 1 cent. I bet 200 to win 5K on the Rockets because I'm like, fuck it. He goes to the free throw line, makes them both. Rockets inbound the ball with like 2.5 seconds. Throw it to KD, 1 dribble, 3-pointer, bang, 1-point game. I'm like, no fucking way. 1-point game, 2 seconds, still 1 cent. I have 200 to win 5K. I've already made 5K. I'm just gambling for fun. At this point, I'm just gambling. Inbound the ball to Shamit. He gets fouled with 1.4 seconds. Goes to the free throw line, up by 1. Misses the first, makes the second. Clock stops, Rocket timeout. Down 2. With 1.5 seconds left, inbound pass, KD catches at half court, 1 dribble, 1-legged fadeaway, shot goes up, clean look, looks good off the hands, arena goes silent, you can hear a fucking pin drop in that place, looks like it's gonna be banked in, off the glass, miss, game over. But gambling's awesome, and it was great, so shout out to the Knicks and shout out to PolyMarket. It was a fucking movie. It was a movie, bro. I didn't want to tweet it because I'm like, I don't really want to like, encourage the fucking gambling. So, if you see me doing picks in the pit, it is what it is. Okay, a couple intro videos real quick. Set the tone, and we're gonna talk about Citrini in a minute. Sit tight. It was a movie. Betting both sides. It was fucking awesome. Okay, let's go. First, speaking of PolyMarket, I saw this is really funny. I can't hear. Oh, here we go. Damn, audio just fried in IG. And we'll come back to it then. Here's a better one for you.
I bet you shit.
Okay, so Clavicula's been talking about Bitcoin a lot recently. And this clip is pretty funny.
I bet half the people are on suicide watch. Remember, go back literally a month ago when me and Sneeko were collabing. Sitting at the restaurant talking about Bitcoin, and I'm like, Bitcoin is dog shit. Bitcoin, don't trust this fucking garbage. It's a horrible investment. And everyone in the chat's like, bro knows nothing. Bro's a retard. Like, don't listen to this kid.
I just want to call out he's victory lapping a BTC dump from like 75 to 64. I'm just calling that out.
Got no idea. Like, vindicated. Jesus. Like, you guys are a bunch of fucking clown retards for buying into this shit, okay? Genuinely, how do you believe this? How do people saying, I'm going to buy Bitcoin, a completely uncentralized, deregulated, basically nothing. It's not a thing. It's not a product. It's not anything. It's a bunch of fucking numbers on a blockchain, and you guys are investing in this piece of shit. Okay? Calling me the dumbass when I tell you, oh no, Bitcoin's going up. It's increased by 10,000x since 2012. It's like, yeah, from 2012. It's like you're not getting any more returns on your investment. It caps out at like.
Look, I'm not going to sit here and say that we're not clown retards, but only we are allowed to call each other clown retards, okay? Clavicular's not earned the right to declare us clown retards, okay? And calling a move from 75 to 64 is like, brother, you have absolutely no idea what we've been through, okay? Now, I like that he spelled out a bull case, which is that it is decentralized. It is not owned by any central government. And as the social contract and trust and the United States government is in peril post-Epstein files, yeah, it's kind of nice to have Bitcoin exist. It's kind of nice to have Bitcoin existing. So look, I'm not disputing I'm not disputing us being clown retards, but only we are allowed to declare ourselves clown retards. Also, I'm not going to say we're not going lower, but it's definitely not what you see at the top. You know, it's definitely not what you see at the top. Are we going lower? Look, different convo, but it's definitely not what you see at the top. Also, someone in the crypto in the YouTube chat says, show your PolyMarket account. I don't believe the story because the odds you share don't make sense. It won't let me log in. It's not letting me log in. I can show you it, actually. I don't want... it's real. 30 to 70, 30 to 97, and then 1 to 99. But the second one didn't happen. Okay, one more video. Oh, here it is. Here it is. Here it is. I'll show you the portfolio real quick. Okay, look. Let's see. What's the best way to show this? Okay, bought Rockets at 7. That was at the end. Yeah, it's all like messed up here. I wish it just shows like pure P&L. I hear all my trades. It's like a little bit messy to go through it. But no, it's real. It's real. It's real. It's just like executed weird. It's real. It's real. It's real. It's real. It's real. I promise it's real. Let me see. Show more. Yeah, look, I spammed it. It's real. It's real. It's real. If I just go on the Rockets market. All right, we'll come back to it. We'll come back to it. I promise you it's real, though. It's just like weird to display it. Okay, one more thing to show on exciting mainstream celebrities talking about our bags. Here you go. Andrew, am I allowed to show Andrew Tate? I think so, right? Yes or no? I don't want to get banned. I really don't want to get banned. Am I allowed to show Tate? Luke, please advise. Lucas, please advise. It's a really funny clip. I think so. Okay, there you go.
Right. OpenClaw. I'm no AI expert, you know.
This guy lost $800,000 on GOAT and you're questioning a 1K bet. They don't know my lore, bro. They don't know how much fucking money I've round tripped.
So let me get this right. OpenClaw. I'm no AI expert, you know. I'm sure there's some programming dork out
We know Top G
there who knows more than me, but OpenClaw. You just plug it into your entire life. Your emails, your Wi-Fi, your WhatsApp. You give it access to absolutely everything, and then you ask it to do things for you instead of you doing them yourself. So instead of going on WhatsApp and messaging someone, you message OpenClaw asking it to go on WhatsApp to message someone. And then this software has absolute control over your entire life, like Skynet. And you're doing it so that you can save time, I guess.
I love when a motherfucker that's not running OpenClaw got a take on OpenClaw. Talking about it connects to your Wi-Fi.
I mean, is it really to save time, or is it because you're a fucking dork and you want to be like, oh my God, look, you don't have an AI virtual assistant? No, you know, no, I don't have an AI virtual assistant. You know what I have? I have a Slavic PA who's bad. I have baddies. And I message the baddies and say, book my hotel, sort my jet. You know, maybe I'm an old-fashioned kind of guy. What happened to the blonde with big tits? I have secretaries who suck me off. I don't have OpenClaw because I'm not gay. Find anybody who's bragging about how they've set up their OpenClaw, and I can guarantee you, I'll bet you $10 billion they're fucking gay. I'm not gay, I'm married. Gay, exactly. Married. You fucking your secretary. Anyway, basically Skynet now is going to access your browser history, find out you like tranny porn, upload it to Israel's central server. Why the fuck are you installing this shit?
All right. He makes a couple irrefutable points. Okay. He makes a couple irrefutable points. The obvious one is that OpenClaw sets you up to some security risks. It's a fair point, number one. It does set you up to some potential security exploits. And it's maybe not the smartest setup for a non-technical person to be running OpenClaw connected to everything in their life. Actually, even the technical people are struggling. Shout out to security at Meta, who had her entire email history deleted because she doesn't know how to run OpenClaw and publicly tweeted about it while having a 7-figure job at Meta. Second is like, yeah, okay. I mean, look, you save on costs. The iReal assistant thing is great, but bro, you save on costs. My OpenClaw is $200 a month. Who are you hiring for $200 a month? Nobody. Who are you hiring for $200 a month? Nobody, bro. Who are you hiring for $200 a month? Nothing. Absolutely nobody. Now, I will say, jokes aside, it is funny that the people that have the hardest takes on OpenClaw are not running it. What's the Elon? Hey, yeah, here you go. People giving OpenClaw root access to their entire life is a tough setup. So, yeah, shout out to the Top G. Shout out to Clavicular. And chat, we have some serious stuff to talk about. We have some serious stuff to talk about. I'm trying to debate how I want to do this because it's going to take a long time. But I think we should start with Citrini. Play the other clavicular clip. Okay, fine. Real quick. I think DNAP sent it in here. DNAP, send it again real quick. Send it real quick. We'll play the clavicular clip and then we'll get into serious stuff. Will it be a Zach XBT crime? Yes, but he just like threatened to release it. He didn't actually release it yet. Okay, last one. Speaking of PolyMarket.
It's like 60-40, yes. It's like 60-40. So what they want to do is they want to give me a cortisol bracelet is what it's called, that people can bet on while I'm wearing it. Like to see my cortisol spikes. That's like the idea. So fuck it.
It's like a mood ring for retards. That's awesome. Shout out to PolyMarket. Shout out to Clavicular. It's awesome. Betting on his cortisol spiking. Gambling's awesome. Shout out Clav. I've been enjoying his clips recently. All right. Talk about Chipotle. We'll talk about Chipotle later. Mood ring for retards is funny. I feel like that deserves some like some like raffles. No. Mood ring for retards. I feel like that was really good. That was like off the dome too. I did not prep that clip. I feel like that was really good. Underrated response to that. All right. Here's the deal. How do I want to address this? Okay. First and foremost, it's just becoming increasingly clear that we are accelerating fast. We're accelerating into a new world fast. And there are often times where paying attention doesn't matter that much. And then there are times when paying attention is imperative to your future success. And right now is one of those times where paying attention is imperative to your future success. Okay? Because we have basically reached this inflection point where nobody really knows what the fuck is going on. And if you are not post-economic and fully established, nobody knowing what the fuck is going on is really, really good for your future financial success, because there's sort of been a great reset of markets, of understanding of how people think about what is what and what matters. And it's happening with AI right now, and it's happening fast. It feels like every week, all we do is talk about AI recently, and we still can't really keep up enough. It also feels like the way that markets trade are evolving. Okay. And it's pretty vindicating on how markets are trading right now, where one Anthropic tweet will nuke a company 20% or pump a company 30%, or some, I mean, not to take anything away from Citrini, who I think is a really, really smart guy, one of the best research shops in markets, but with all due respect, is a Twitter influencer that just wiped $50 billion out of the stock market on a Substack post. That's the market that we live in right now. And that market should feel familiar to you if you know who I am from crypto, because this is how crypto trades. It's narrative, it's shit posts, it's articles, it's podcast driven. It's a podcast driven market. And the TA and the fundamental analysis guys are completely at a loss for what's happening right now. It's like everything's moving too fast. Everything's rotating too fast. Everything's getting vamped too fast. Nothing has a moat. Anything could be uprooted at any given moment. And you're always one tweet away from your net worth doubling or getting cut in half. And it's like, whoa, that's crypto, what I just described. That is the crypto market. And the world is trading like megachurch. It's trading on narrative. It's trading on vibes. I mean, dude, look, you look at these, we'll talk about this on the back end, but you look at these SaaS companies and these tech companies over the 2020s anyways that traded these ridiculously inflated price to earnings ratios. They're just trading on vibes anyways. All software is just vibes. Like, yeah, they're making a ton of money, but most of them are just trading on vibes. It's like the Uber moat. They're all trading on fucking vibes anyways. It's just crypto. It's just complicated crypto. And it feels like it is being extrapolated right now in real time. The market is changing. And I think if there was ever a time to really lock in on the front lines, to be focused on the shift that's happening right now, it's in this moment, I think. And this weekend felt pretty significant. And so if you weren't around, Citrini, who, if you don't follow, I'm sure you'll be following by the end of the stream. Citrini7 is a guy, but they also run this little research firm. I mean, this little research firm. I think it's relatively small, but they run a research firm. And I don't think it's like anything crazy as far from like a funding and numbers perspective. Okay. I actually met Citrini in New York in, I don't know, 6-7 months ago. And things were a lot different back then. Bitcoin was 100 something K. I didn't really know who he was. I sort of knew who he was. I mean, I knew who he was, but I didn't understand the scale of who he was. And I met him. He was fucking sick. I met him at the sick spot. And physiognomy check is awesome. He's one of these like larger than life kind of guys. Like he was fucking just, yeah, he's like a sick hang, honestly. I didn't get to talk to him for very long. I probably got to talk to him for 20 minutes on the outskirts of a conversation, but I met him. Really smart guy, had sick takes, and I enjoyed him. And basically, since I met him, he's been on a fucking... Also, that trip, on that trip, I didn't meet, but I made eye contact with Zohran Mamdani pre-winning the New York mayoral election. And so basically what happened is Citrini on Sunday writes this article called The 2028 Global Intelligence Crisis. And we're about to read it. It's very long and it's very important that you digest what is written in between these lines. And it has, I don't know, I think it had like 10, 20 million views. Something crazy. It was the top, I mean, it was mega church to a T. And the result was one, terror across Twitter. Terror. Just being honest, terror. And two was an utter wipeout of the stocks mentioned in this article. He mentioned DoorDash, he mentioned Visa, he mentioned MasterCard, he mentioned Uber. And I believe there is something like a 50 billion plus collective market cap wiped out of the stock market from names that were explicitly mentioned in this article. Crazy. $50 billion because basically some guy went on Twitter and posted a Substack article about a hypothetical scenario that might play out over the next couple years. And it's in Bloomberg. Bloomberg posted about it. It's popping up on Squawk Box. $50 billion were eliminated from the stock market. The entire world trades on vibes, trades on fun, trades on just news, trades on hypothetical scenarios, hypothetical theses. And things are evolving pretty quickly. And so this, I think, when we look back, will be a relatively important moment. Like we will look, I think the Citrini moment will be somewhat important, whether SaaS gets destroyed from here and it plays out the way that he thinks, or things completely recover. Whatever it is, we will remember Sunday, February 22nd, 2026, when Citrini posted the 2028 AI Doomer article. We're just going to remember it. And so this is a pretty significant day, I would argue. It has long tail implications on the up, on the down, everywhere in between. And so I am going to read it. I have an annotated version. I'm going to read it. I'm going to give you like a lot of takes. I have a really clean summary at the end if it makes no sense to you. And we're going to talk about the implications through and through because there's a lot of them. So that's what we're going to do. This is going to be a long segment. This is going to be a long segment. And so I'm going to get up real quick. I'm going to take a fucking breather. I'm going to come back and we are going to read the Citrini article. So sit tight. I'll be back in 30 seconds and get ready. Get a drink, get your tea made, get your food out, do whatever you got to do, rub one out, whatever, and let's fucking go. All right, BRB. Jones. Hey, my dad would be hyped if he knew I was playing this. Mom, tell dad I'm playing this. If you're watching, tell dad I'm playing this. All right. Before we get into this, I want to just get a quick vibe check. Who actually read the article? Yes or no? Who actually read the article? I know you saw it, but did you read it? And I'm not summarizing with AI. I'm talking about really, really read it. Did you read it? Okay, good amount. A good amount, nice. Don't lie, don't lie, don't lie, don't lie. Yeah, okay. No, waiting for you to read it to me. Nice. We haven't done reading in a while. I'm pretty excited, actually. We haven't done a good reading segment in a long time. I just think about the Michael Burry. I was literally like, TJ will cover this. I figured you'd read it anyways. That's so awesome. I love it. It makes me so happy. Take my headphones off. You think I'm better with the headphones on or off? Maybe on. So, yeah, I had ChatGPT read it to me. This is one of those ones that GPT doesn't do it justice, honestly. It doesn't do it justice. I think certain things deserve to be read raw. And this is one of them for sure. So, yeah, let's just get it. I have an annotated version here. And we're going to get into this. We're going to read it. It's going to take a while. This is going to be one of those, I'm going to go slow. You should go slow. And it is very important that we internalize. I read it twice. I skimmed it once. Then I read it for real this morning, or like last night-ish. And then I read it again this morning, skimmed. And then we annotated it. DNAP annotated it. So we're going to go slow. It's going to take some time. And I want everyone here, as we're reading, to just really digest first, second, third, fourth layer order of effects on what you think happens from here. Because $50 billion of the stock market were wiped out from this. I know some friends that work at some macro trading firms. They're talking about Citrini's article. Seriously, like the guy's a fucking shit poster on Twitter. Wiped out 50 Bs. It's big. It's. You don't take a moment like that lightly. You just don't. You don't take a moment like that lightly. Okay. So let's go. Let's lock in. Let's focus. I'm gonna fucking crack my neck. Pause. My surgery appointment tomorrow. I'm excited. And let's fucking get it. At the end, if you get completely lost at the end, I'm going to do a really clean summary on MS Paint. It's going to be awesome. So your thesis on spending your life on Twitter keeps getting validated. I know. That's what we fucking do. I did get a haircut. All right. Let's get it. I'm wasting time. All right. I get tired when I read a lot. It takes a lot for me to enunciate my words. I'm going to try to go slowly. All right. The 2028 Global Intelligence Crisis. Quick summary is AI is real, but the economy was built for humans. Employment and wages. AI drives white-collar unemployment and wage reduction. White-collar works crowd into the blue-collar gig economy, suppressing wages even further. 2, private credit. AI kills the SaaS seat model of revenue. Private credit built on recurring SaaS revenue defaults as the revenue stops recurring. And then 3, prime mortgages. This is sort of the nail in the coffin. Money good home loans initially issued to high-quality white-collar workers default as incomes are destroyed. The prime end of the massive mortgage market blows up. Home prices crater. Private credit is already looking weird, by the way. Also, real quick before we start, if you want the article, this is it. I'll share the link. More Zoom, I can do that. All right, let's fucking get it. If you haven't read it, good luck. Can you share the annotated version? Maybe. All right, let's do it. What if our AI bullishness continues to be right? And what if that is actually bearish? It's the core black pill. What if we were right about AI? Maybe even more right than we initially thought. And it's bearish for the market. Citrini research, February 22nd, 2026 through June 30th, 2028. The unemployment rate printed 10.2% this morning, a 0.3% upside surprise, more unemployment than we thought. The market sold off 2% on the number, bringing the cumulative drawdown in the S&P to 38% from its October 2026 highs. 2 years. That's all it took to get from contained and sector-specific to an economy that no longer resembles the one any of us grew up in. The euphoria was palpable. By October 2026, we're now forward-looking, the S&P flirted with 8,000. The NASDAQ broke above 30K, all-time high after all-time high. The initial wave of layoffs due to human obsolescence began in early 2026, and they did exactly what layoffs are supposed to. Margins expanded, earnings beat, stocks rallied. Record-setting corporate profits were funneled right back into AI compute. I want to make one real quick before we get too deep. I want to make one caveat on where is it? Just so you understand. Yeah, okay, here you go. I want to add this caveat real quick. What follows is a scenario, not a prediction. It's a scenario. He's basically painting out a picture for us. This isn't bear porn or AI doomer fan fiction. The sole intent of this piece is modeling a scenario that's been relatively underexplored. Okay? So he's basically laying out this picture. So here we are now, October 2026, forward-looking, 6-8 months in the future. Layoffs are happening. Company margins are getting better. Stocks are ripping. That's where we are right now. All profits are funneling back into AI compute. We're in the hypothetical. The owners of compute saw their wealth explode as labor costs vanished. Meanwhile, real wage growth collapsed. When cracks began appearing in the consumer economy, economic pundits popularized the phrase, quote, ghost GDP, output that shows up in the national accounts but never circulates through the real economy. In every way, AI was exceeding expectations. In the market was AI. The only problem is the economy was not. The economy is for humans. So AI is crushing expectations, but the economy is not AI. It should have been clear all along that a single GPU cluster in North Dakota generating the output previously attributed to 10,000 white-collar workers in Midtown Manhattan is more economic pandemic than economic panacea. Jesus, the fucking vocabulary. The velocity of money flatlined. The human-centric consumer economy, 70% of GDP at the time, withered. The human-centric consumer economy, 70% of GDP. Panacea. 70% of GDP, the human-centric consumer economy, withered, hollowed out, carnage. We probably could have figured this out sooner if we just asked how much money machines spend on discretionary goods. Hint, it's zero. It was a negative feedback loop with no natural break. The human intelligence displacement spiral. White-collar workers saw their earnings, power, and rationally their spending structurally impaired. Their incomes were the bedrock of the $13 trillion mortgage market, forcing underwriters to reassess whether prime mortgages are still money good. Okay? Everybody's getting fired. White-collar workers are getting fired. Companies are forced to do it to increase their margins. White-collar workers are attributed to most of the consumer spending in the United States. White-collar workers can no longer spend because they are fired. And we are sort of getting stuck in this negative feedback loop with no natural break. Skipping a lot of fluff here just because it's easier to read, get to the key points. The system turned out to be one long daisy chain of correlated bets on white-collar productivity growth. Okay? Private credit is basically one long daisy chain of correlated bets on white-collar productivity growth, which is no longer happening. In late 2025, agentic coding tools took a step function jump in capability. A competent developer working with Claude Code or Codex can now replicate the core functionality of a mid-market SaaS product in weeks. That summer, we spoke with a procurement manager at a Fortune 500. He told us about one of his budget negotiations. The salesperson had expected to run the same playbook as last year, a 5% annual price increase. The standard, quote, your team depends on us pitch. The procurement manager told him he'd been in conversations with OpenAI about having their forward deployed engineers use AI tools to replace the vendor entirely. They renewed at a 30% discount. Procurement. It's like, okay, cool. You run a sales team and you're trying to force your way into a raise because the team depends on us pitch. It's like, nah, we're just going to replace you with OpenAI and renew at a 30% discount. Crazy. It wasn't until ServiceNow's Q3 26 report that the mechanism of reflexivity became clearer. We're Q1 right now. This is Q3. Quote, ServiceNow net new ACV growth this decelerates to 14% from 23%. Announces 15% workforce reduction in structural efficiency program. Shares fall 18%. SaaS wasn't dead. There was still a cost-benefit analysis to running and supporting in-house builds, but in-house was an option, and that factored into pricing negotiations. Highlighted, AI has made it easier to develop and ship new features, so differentiation collapsed. Incumbents were in a race to the bottom on pricing, a knife fight with both each other and with the new crop of upstart challengers. You can no longer upsell. Your brand moat means nothing. And you're also battling an infinite pool of new startups. The interconnected nature of these systems weren't fully appreciated until this print either. ServiceNow sold seats. When Fortune 500 clients cut 15% of their workforce, they also canceled 15% of their licenses. The same AI-driven headcount reductions that were boosting margins at their customers were mechanically destroying their own revenue base. It's like they're cutting employees, but they're also cutting contracts. The company that sold workflow automation was being disrupted by better workflow automation, and its response was to cut headcount and use the savings to fund the very technology disrupting it. AI is getting better, so you're cutting the workforce. You're using the new money to make AI get better. AI is getting better because you're throwing more money behind it. Because it's getting better, because you've thrown more money behind it, you're also cutting headcount, using the new money to fund AI to make it better. It's just like downward reflexive doom spiral. What else were they supposed to do? Sit and die slower? The companies most threatened by AI became AI's most aggressive adopters. You have no other choice. Cut the workforce, spend more money on AI, or die a slow, painful death. This sounds obvious in hindsight. Also, we're at Q3 2026 right now. But it really wasn't at the time. The historical disruption model said incumbents resist new technology. They lose share to nimble entrants and die slowly. That's what happened to Kodak, to Blockbuster, to BlackBerry. What happened in 2026 was different. The incumbents didn't resist because they couldn't afford to. With stocks down 40 to 60% and boards demanding answers, the AI-threatened companies did the only thing they could do. Cut headcount, redeploy the savings into AI tools, use those tools to maintain outputs with lower cost. Each company's individual response was rational. The collective result was catastrophic. And so if one person does it, it doesn't matter that much. If two people does it, it doesn't matter that much. If 3, 4, 5 matters less. But if everybody is forced to do it, the results are catastrophic. Software was only the opening act. By early 2027, LLM usage had become default. We're now in 2027. People were using AI agents who didn't even know what an AI agent was. In the same way, people who never learned what cloud computing was used streaming services. They thought of it the same way they thought of autocomplete or spell check, a thing their phone just did now. We're basically there. Using an LLM or being able to vibe code is a thing your phone just does. I don't know how the cloud works. I don't know how iCloud works. I don't know how the messaging app works. My phone just does it. Quen's open source agentic shopper was the catalyst for AI handling consumer decisions. Within weeks, every major AI assistant had integrated some agentic commerce feature. Distilled models meant these agents could run on phones and laptops, not just cloud instances, reducing the marginal cost of inference significantly. The part that should have unsettled investors more than it did was that these agents didn't wait to be asked. They ran in the background according to the user's preferences. Commerce stopped being a series of discrete human decisions. It became a continuous optimization process, running 24/7. By March 2027, the median individual in the United States was consuming 400,000 tokens per day, 10x since the end of 2026. Chat, how's my pace? How's my pacing? It's starting to get crazy. It's starting to get really crazy. The next link in the chain was already breaking. Intermediation. I'm going to skip a little bit. And so one of the things that agents optimize is efficiency. And so if they're managing your consumer actions, they're going for max efficiency. Okay? They don't care about, like, humans don't care as much about price. Humans care a lot about brand moat and brand consistency and the things that you've used in the past. Agents don't give a fuck. They also don't care about doing the extra legwork to get max efficiency. Humans don't really have the time to price match across 5 competing platforms before buying a box of protein bars. Machines do. Travel booking platforms were an early casualty because they were the simplest. Think about that. They're the simplest. Agents that reshop your coverage annually dismantled the 15 to 20% of premiums that insurers earn from passive renewals. Financial advice, tax prep, routine legal work. Any category where the service provider's value prop was ultimately, quote, I will navigate complexity that you find tedious, was disrupted as the agents found nothing tedious. Insta disruption. Accounting disrupted. Travel disrupted. Disrupted. Think about how much of your habits as a think about how much capital you spend for like making complex tasks easy that you don't want to fucking do. It's a lot. The answer is a fucking lot. Bum speed 1.75, bro. I'm reading as fast as I can. We had overestimated the value of human relationships. Turns out that a lot of what people called relationships was simply friction with a friendly face. Waymo and Uber is showing this. Machines optimizing for price and fit do not care about your favorite app or the websites you've been habitually opening for the last 4 years, nor feel the pull of a well-designed checkout experience. They don't get tired and accept the easiest option or default to, quote, I just always order from here. That destroyed a particular kind of moat, habitual intermediation. DoorDash was the poster child. The DoorDash moat is literally, you're hungry, you're lazy. This is the app on your home screen. An agent doesn't have a fucking home screen. Habitual app loyalty. The entire basis of the business model simply doesn't exist for a machine. Once agents controlled the transaction, they went looking for bigger paperclips. There was only so much. Here's a really good one. There was only so much price matching and aggregating to do. The biggest way to repeatedly save the user money was to eliminate fees. In machine-to-machine commerce, the 2 to 3% card interchange rate became an obvious target. What's good, Manny XPT? Agents went looking for faster and cheaper options than cards. Most settled on using stablecoins via Solana or Ethereum L2s, where settlement was near instant and the transaction cost was measured in fractions of a penny. MasterCard Q1 2027. Net revenues plus 6%. Purchase volume growth slows to plus 3.4%. Management note, quote, agent-led price optimization and pressure in discretionary categories. And so I'm just going to say that the article from macro thinker Citrini that wiped $50 billion out of stock market intraday is the most bullish on crypto out of any of us fucking retards. He's the most bullish. He's like, yeah, agents are going to optimize everything. For credit card fees, they're going to fucking love stable coins, and stable coins are going to win. You'll love to see it. Nexus, what's good, my brother? Hope you've been well. And so here we are, moving through it. I think we're about halfway done, maybe a little bit more. MasterCard dropped 9% the following day. Visa did too, but paired losses after analysts pointed out its stronger positioning in stablecoin infrastructure. Basically, everybody has no choice. I don't know if he's bullish crypto prices either, but he's bullish crypto infra, just like the rest of the world. Here you go. $100 purchase. Merchant receives $97.50. With stablecoins, they receive $99.99. It's nothing more simple than this. Nothing more simple than this. The moats was made off friction, credit card companies, and friction was going to zero. Our January 2027 macro memo argued this was the wrong mental model. The U.S. economy is a white-collar services economy. This is very important for the larger theme here. White-collar workers represent 50% of employment and drive roughly 75% of discretionary consumer spending. Half of the jobs in the U.S. are white-collar. 75% of consumer spending is done via white collar workers. And so when you make the claim that AI is going to wipe out the art of the white collar, it's a pretty substantial claim that you're making. The businesses and jobs that AI was chewing up were not tangential to the US economy. They were the US economy. This is the US economy. The US economy is a white collar services economy. This is it. Quote, technological innovation destroys jobs and then creates even more. This was the most popular and convincing counter argument at the time. It was popular and convincing because it'd been right for 2 centuries. We've heard this forever, right? This was the Industrial Revolution thesis. This was the internet thesis. This is now the AI thesis. Is yes, AI and new tech destroys jobs, but in that wake, it creates new jobs. The question now is that's being tested. Is that true? Well, it's not exactly clear that that is true. Every new job, however, in the past has required a human to perform it. AI is now a general intelligence that improves at the very tasks humans would redeploy to. Displaced coders cannot simply move to AI management because AI is already capable of that. Scary thought. Like, where we basically are in this argument is that AI has gotten so good, it has destroyed the workforce, it has wiped out the bloat and the need for most of the white collar wage industry, and it's created no new jobs. That is what is being argued right now. That is going to wipe everybody out of their jobs and is not going to create any new ones, which is like a counter to the thesis we have sort of been playing with prior to this. This is a chart that we've seen. Okay, it's actually the chart we've seen had cut off here. This is a newer version. They write essentially all code, AI. The highest performing of them are substantially smarter than almost all humans at almost all things, and they keep getting cheaper. AI has created new jobs. Prompt engineers, AI safety researchers, infrastructure technicians. Humans are still in the loop, coordinating at the highest level or directing for taste. For every new role AI created, it rendered dozens obsolete. So for every one new job, 12 are gone, 24 are gone. The new roles paid a fraction of what the old ones did. US JOLTS. Job openings fall below 5.5 M. Unemployed to openings ratio climbs to 1.7, highest since August 2020. Bloomberg, October 2026. Indeed postings fall sharply in software, finance, consulting as productivity initiatives spread. Indeed Hiring Lab, November to December 2026. White collar openings were collapsing with blue collar openings, while blue collar openings remained relatively stable. The cycle's cause was not cyclical. So this is the AI feedback loop. We'll come back to this. AI got better and cheaper. Companies laid off workers, then used the savings to buy more AI capability, which led them to lay off more workers. This is sort of the death spiral we covered in the beginning. AI gets really good. Because AI got really good, you can now use AI to replace mundane tasks that your employees currently do, allowing you to lay off more employees. With the new budget, you make the AI better, which means it can do more stuff, leading to more tasks being mundane. Lay off more people, take the money, AI better. Lay off more people, take the money in the wrong direction. A feedback loop with no natural break. A company that had been spending $100 million a year on employees and $5 million on AI now spent $70 million on employees and $20 million on AI. AI investment increased by multiple, but it occurred as a reduction in total operating costs. Every company's AI budget grew while its overall spending shrank. AI CapEx goes crazy, but overall operating costs and spending shrinks because everybody else's shrinks as well. The irony of this was that the AI infra complex kept performing even as the economy it was disrupting began deteriorating. NVIDIA was still posting record revenues. TSM was still running at 95% utilization. The hyperscalers were still spending 150 to 200 billion per quarter on data center capex. Economies that were purely convex to this trend, like Taiwan and Korea, outperformed massively. India was the inverse. The country's IT services sector exported over 200 billion annually, the single largest contributor to India's current account surplus. But the marginal cost of an AI coding agent had collapsed to, essentially, the cost of electricity. The rupee falls 18% against the dollar in 4 months. The engine that caused the disruption got better every quarter, which meant the disruption accelerated every quarter. There was no natural floor to the labor market. There's no brakes. You didn't need to go into the BLS data. Just attend a dinner party with friends. Displaced white-collar workers did not sit idle. They downshifted. Many took lower-paying service sector and gig economy jobs. A friend of ours was a senior product manager at Salesforce in 2025. Title, health insurance, 401k, 180k a year. That's a good job. She lost her job in the third round of layoffs. After 6 months of searching, she started driving for Uber. Her earnings dropped to $45,000 a year. Multiply this dynamic by a few 100,000 workers across every major metro. Overqualified labor flooding the service and gig economy pushed down wages for existing workers who were already struggling. Sector-specific disruption metastasized into economy-wide wage compression. And so think about this. It's like you have this mass firing of white-collar jobs. Metastasized. You have this mass firing of white-collar jobs. Okay? And so you get laid off. You were like an entry-level engineer at Salesforce or whatever, IBM, whatever. You don't have a job anymore. And so what do? Well, you're not going to just sit there and fucking jerk off. You are going to go down the wage hierarchy and you're going to go drive for Uber. It's like, okay, you're super overqualified driving for Uber in an already competitive market. There's already enough Uber drivers. And so what happens? What happens is the game gets hyper competitive. People that are already struggling struggle more, and wages just depress across the economy. Now, at the same time, cool. It isn't just a given that you could just go drive for Uber, because there's more Waymos than Uber drivers in California. Do you think that trend accelerates or decelerates? Well, it obviously accelerates. Waymo drivers don't need brakes. They don't need health insurance. They don't have kids. They don't have to pay for their family. It just compresses and compresses and compresses and compresses and compresses. By February 2027, it was clear that still employed professionals were spending like they might be next. Remember, what we talked about at the beginning is that basically the entire economy is based off of white-collar consumer spending. They're working twice as hard, just not to get fired. Hopes of promotion or raises were gone. Savings rates ticked higher and spending softened. Who the fuck's spending when you think you're next? Who's spending? Nobody. U.S. initial jobless claims surged to 487,000, highest since April 2020. The S&P dropped 6% over the following weeks. Negative macro started winning the tug-of-war. The top 10% of earners account for more than 50% of all consumer spending in the U.S. The top 20% account for roughly 65%. These people buy the houses, the cars, the vacations, the meals, private school, the home renovations. They are the demand base for the entire consumer discretionary economy. When these workers lost their jobs or took pay cuts, the consumption hit was enormous. A 2% decline in white-collar employment translated to something like a 3 to 4% hit to discretionary consumer spending. We're almost done here. Private credit, this is where it gets freaky, had grown from under 1 trillion in 2015 to over 2.5 trillion by 2026, bigger than Bitcoin. A meaningful share of that capital had been deployed into software and tech deals, many of them leveraged buyouts of SaaS companies at valuations that assumed mid-teens revenue growth in perpetuity. Why is this a problem? Well, everyone's leveraged into SaaS company returns that are no longer returning. They're getting ostracized by AI. They have less employees. Their spend is less. They're using AI to optimize more. It's more competitive, and there's less people to give them deals and to buy their software. Those assumptions died somewhere between the first agentic coding demo and the Q1 2026 software crash, where we are right now. But the marks didn't seem to realize that they were dead. Moody downgrades $18 billion of private equity-backed software debt across 14 issuers, citing secular revenue headwinds from AI-driven competitive disruption, largest single sector action since energy in 2015. We're almost done, by the way. Zendesk was the smoking gun. Zendesk misses debt covenants as AI-driven consumer service automation erodes ARR. $5 billion in direct lending facility marked to 58 cents. Largest private credit software default on record. Revenue the loan was underwritten against. The annualized recurring revenue these loans were underwritten against was no longer recurring. It was just revenue that hadn't left yet. Think about that. There's all this money back in the economy in revenue that they think is going to be recurring in perpetuity, and it's just not anymore. All of a sudden, out of nowhere, it's just not anymore. WP FOMO, thanks for the gifted. The largest ARR backed loan in history became the largest private credit software default in history. This is crazy. But here's what the consensus got right. At least initially, this should have been survivable. Private credit is not 2008 banking. The whole architecture was explicitly designed to avoid forced selling, okay? This is what's different about 2008. These are closed-end vehicles with locked-up capital. LPs committed for 7 to 10 years. There are no depositors to run, no repo lines to pull. Okay, basically permanent capital based on the fact that the revenue from these SaaS companies are going to happen forever. Permanent capital. The phrase showed up in every earnings call, an investor letter meant to reassure. And like most mantras, nobody paid attention to the finer details. Over the prior decade, the large alternative asset managers had acquired life insurance companies and turned them into funding vehicles. It was the savings of the American households, Main Street, structured as annuities invested in the same PE-backed software and technology paper that was now defaulted. The private credit had to be money good. It doesn't matter anymore. Circumstances have changed. We're basically done. We have like 5 more pages of skimming. How are we feeling here? Yeah, we're feeling good. Cool. All right, ready? Before I keep going, are you guys following where we're at right now? Are you following this spiral? Are you following where we're at? Like, do you understand where we are in the story? How we got here? What's happening? Also, if you're watching on Twitter or YouTube and you want to chat, twitch.tv/threadguy. Okay, you're following. W reader. Spam some W readers. Cool. The ratings agencies, some of which were themselves private equity owned, had not been paragons of transparency. Apollo's, the spiderweb of different firms linked to different balance sheets was stunning in its opacity. When the underlying loans defaulted, the question of who actually bore the loss was genuinely unanswerable in real time. Okay? Apollo's stock dropped 22% in 2 sessions. A daisy chain of correlated bets on white-collar productivity growth. Okay, that's what we're basically calling the private credit industry. A daisy chain of correlated bets on the white-collar productivity growth, which is no longer growing and no longer productive. It's not growing anymore. It's not productive. It's actually carnage. And all of private equity is bet on this happening in perpetuity. Do you see why that's a problem? Was what Fed Chair Kevin Warsh called it during the FOMC's emergency November meeting. See, it is never the losses themselves that cause the crises. It's recognizing them. Zillow Home Value Index falls 11% year over year in San Fran, 9% in Seattle, 8% in Austin. Fannie Mae flags elevated early stage delinquencies in zip codes with over 40% tech finance employment. Mortgage crisis. Nobody can afford their houses anymore because nobody has a fucking job because the entire economy that's propped up on white-collar consumer spending is no longer existing. The U.S. residential mortgage market is approximately $13 trillion. Luke, please don't click anything. We now have to ask a question that seemed absurd just 3 years ago. Are prime mortgages money good? Okay. Every prior mortgage crisis in U.S. history have been driven by one of three things: speculative excess 2008, interest rate shocks in the 80s, or localized economic shocks, oil in Texas, auto in Michigan. None of these apply here. The borrowers in question are not subprime. They're 780 FICO scores. They put 20% down. Okay. In 2008, understand this. In 2008, the loans were bad on day one. They were just writing bad, irresponsible loans. In 2028, the loans were good on day one. The world just changed after the loans were written. People borrowed against a future they could no longer afford to believe in. Okay. If you were making 180K at Salesforce and you're now making 45K a year driving Uber because you got unemployed, because everybody got unemployed, can you still afford your mortgage that you wrote when you were making 180K? I was 6 in 2008. I was 6 in 2008. And so this is the mortgage crisis. I mean, we get it, right? We get how the mortgage crisis thing comes to be. We're almost done. Almost at the end. It doesn't get better, by the way. We're almost at the end, and it doesn't get better, if I'm just being honest. The traditional policy toolkit, rate cuts, and QE can address the financial engine, but it cannot address the real economy engine, because the real economy engine is not driven by tight financial conditions. It's driven by AI making human intelligence less scarce and less valuable. You can cut rates to zero and buy every mortgage-backed security and all the defaulted software LBO debt in the market. It won't change the fact that a Claude agent can do the work of a $180,000 product manager for $200 a month. If these fears manifest, the mortgage market cracks in the back half of this year. In that scenario, we'd expect the current drawdown in equities to ultimately rival that of the GFC, 57% peak to lows. This would bring the S&P to 3,500. Okay, basically what he's saying is that there's not really a bailout that can happen here because there isn't some buildup of leverage in the system that needs to be wiped and then things have to just return to normal. It's like you could bail out the mortgages all that you want, but what has been eliminated here is not capital. It isn't a lack of capital, but it's a lack of value on human intelligence. Do you understand the difference there? It isn't that we need some forced sellers to get liquidated and then things rocket back up. It's that the people that have bought these, are paying these mortgages, bought these houses, are funding the economy, can no longer afford to fund the economy forever. And so it isn't a time thing. It isn't like it could get bailed out in a year or 2 years or 6 months of bad price action. It's like $180,000 earners will never be $180,000 earners again, is basically the thesis. And so the system wasn't designed for a crisis like this. The federal government's revenue base is essentially a tax on human time. People work, firms pay them, the government takes a cut. Through Q1 of this year, federal receipts were running 12% below CBO baseline projections because nobody's employed, nobody's getting taxed, nobody has money to pay. Labor's share of GDP declined from 64% in 74 to 56% in 2024, a 4-decade grind lower. In the 4 years since AI began its exponential improvement, that has dropped to 46%, the sharpest decline on record. We're in the final 2 pages. The output is still there, but it's no longer routing through households on the way back to the firms, which means it's no longer routing through the IRS either. The circular flow is breaking. The IRS isn't getting any fucking money either, right? If no one has money to pay, government's not getting any either. The government needs to transfer more money to households at precisely the moment it is collecting less money from them in taxes. The US won't default. It prints the currency it spends. But this stress has shown up elsewhere. Jesus. How do I say this? Municipal bonds are showing worrying sides of desperation. States dependent on income tax began to price in some default risk. The administration, to its credit, recognized the structural nature of the crisis early and began entertaining bipartisan proposals for what they're calling the, quote, Transition Economy Act, a framework for direct transfers to displaced workers funded by a combination of deficit spending and a proposed tax on AI inference compute. UBI. The most radical proposal goes further. The Shared AI Prosperity Act would establish a public claim on the returns of intelligence infrastructure itself, something between a sovereign wealth fund and a royalty on AI-generated output. So basically, democratizing the money that AI makes, giving it back to the people. AI, or UBI is how I read that. The politics behind the discussions have been grimly predictable. The right calls transfers Marxism and warns that taxing compute hands the lead to China. Cold War. The left warns that a tax drafted with the help of incumbents becomes regulatory capture by another name. While the politicians bicker, the social fabric is fraying faster than the legislative process can move. And this is basically it. Last couple paragraphs. It's a lot of reading, dude. I mean, give me a break. It's a lot of reading. It's a lot of reading. It's a lot of reading. It's a lot of reading, bro. It's a lot of reading. Here we go. Home stretch. How does this end, you might ask, threadguy? Well, I'm about to tell you. Give me some W readers to fire me up. I'm about to tell you how it ends. The Occupy Silicon Valley movement has been emblematic of wider dissatisfaction. Last month, demonstrators blockaded the entrances to Anthropic and OpenAI's San Francisco office for 3 weeks straight. Mass protests. Their numbers are growing. It's hard to imagine the public hating anyone more than the bankers in the fallout of the GFC. But the AI labs are making a run at it. And from the perspective of the masses, for good reason. Their founders and early investors have accumulated wealth at a pace that makes the Gilded Age look tame. Every side has their own villain, but the real villain is time. AI capability is evolving faster than institutions can adapt. The policy response is moving at the pace of the ideology, not reality. If the government doesn't agree on what the problem is soon, the feedback loop will write the next chapter for them. The government can't move fast enough to underwrite what is happening. For the entirety of modern economic history, human intelligence has been the scarce input. We are now experiencing the unwind of that premium, okay? Human intelligence is no longer the bottleneck for anything. Machine intelligence is now a competent and rapidly improving substitute for human intelligence across a growing range of tasks. The financial system, optimized over decades for a world of scarce human minds, is repricing. That repricing is painful, disorderly, and far from complete. But repricing is not the same as collapse. The economy can find a new equilibrium. Getting there is one of the few tasks left that only humans can do. We must do it correctly. Last 3 paragraphs. You ready? This is how it ends. This is the first time in history the most productive asset in the economy has produced fewer, not more jobs. Nobody's framework fits because none were designed for a world where the scarce input became abundant. So we have to make new frameworks. Whether we build them in time is the only question that matters. It's the last question, the final frontier. But you're not reading this in June 2028. You're reading it in February 2026. The S&P is near all-time highs. The negative feedback loops have not begun. We are certain some of these scenarios won't materialize. We're equally certain that machine intelligence will continue to accelerate. The premium on human intelligence will narrow. As investors, We still have time to assess how much of our portfolios are built upon assumptions that won't survive the decade. As a society, we still have time to be proactive. The canary is still alive. The 2028 global intelligence crisis. Wow. Wow. Oh, wow. Oh, wow. Oh, wow. Oh, wow. Okay. And before I do a summary, I just want to make something very clear that one, I don't think the world is ending, but I want to articulate to you just how serious the world is taking this. And I'm going to show you 4 charts. This was posted yesterday. The stock market opened today. And since the posting of this article, from the names mentioned in the Citrini article, there's been a combined over $50 billion wiped out of the stock market. Amex was mentioned. Amex is down $20 billion. Visa was mentioned. Visa is down $20 billion. DoorDash was mentioned explicitly. DoorDash is down over $5 billion. MasterCard was mentioned. MasterCard is down over $4 billion. ServiceNow was mentioned. ServiceNow is down over $5 billion. Not even to mention Monday, Zapier, etc. All of this happened in one day from a Substack post from a popular macro Twitter influencer on X. This wasn't written by Jane Street. This wasn't written by Peter Thiel, Mark Zuckerberg, Bill Gates. This was written by a Twitter influencer on X. And so 3 things are true here. 1, posters run the world. A good poster runs the world. 2 is markets are forever going to trade more mimetic and more like crypto. This is just a fact. More markets are going to trade off vibes, off narrative, off stories, and like crypto. And the 3rd thing that is true is that there is some level of validity to this post, at least $50 billion worth of validity. That's a lot. 50 Bs wiped out. Boom. Just like that. Are you fucking kidding me? It was mentioned in Bloomberg. 50 Bs wiped out. Just like that. And so what we're going to do is, that was a lot. Do you feel like you fully understood what you just read? Or what you were just serenaded? Because I'm going to try it for the first time ever. I'm going to do a MS Paint recap of what we just read. And then we are going to talk about the implications of what happens next. Before we do it, I just chugged a fucking venti coffee. Hit the yard. Do what you got to do. Back in 30 seconds. Let's fucking recap it, all right? MS Paint. Going big A mode. BRB. Let's get it. So, okay, a couple things here. Is one, I don't think everything is doomer. Like, I don't think the world is ending. And I think there's a lot of feedback, like pushbacks, rebuttals to the Citrini article, which we will cover. We'll go over some of them. Now, if you want to be doomer, I'm going to just tell you this straight up. That, unfortunately, for the bulls or the optimists, the main pushback on the Citrini article is that the timeline is too aggressive. Basically, people are saying there's no way this happens by 2028. Are you retarded? Which, you know, is not exactly what you want to read. As that being the main pushback, is that the timeline's too aggressive. Is like not great. The beauty here is that, like I said before, and I'll continue reiterating because I think you should feel very excited about this, is that there's been a great reset in the market. One, you're going to get cheap asset prices, maybe for the first time in your life, especially if you're young. And two, the hierarchy of social contract that we have believed to be true over the last 20, 25 years is completely being broken right now. And so if you are adjustable and you can move fast and you can formulate a new thesis and you trade narratives and you understand how to trade momentum and just vibes, well, it's going to be a good decade for you. It's going to be a very good decade for you. That doesn't mean there isn't going to be scary stuff happening. But there is just a great reset on a lot of things that we thought to be indefensible and forever true. And again, I keep saying that, but I believe that we're uniquely positioned to be good at trading this market and understanding it. And that's why I think, like, this is why we're spending so much time on this. It's like, this is the new, it's like, Citrini post this yesterday, stocks react to it today. Like, there's no one more caught up. It's like what we have to do. We have an obligation to cover this today. And so figuring out and wrapping our head around the understanding of what's going on is going to be imperative for our thesis building down the line. So that's like our job, is to understand this to the best of our ability. And so I'm going to give you a recap of how I interpreted what we just read. Okay. And I'm going to try to do it with this. I'm going to try to do it on MS Paint. It might be a disaster. Clown me if you must. But I'm going to do my best to give you a summary on what we just read. Okay. Also, if you're watching on Twitter, YouTube, whatever, and you want to chat, twitch.tv/threadguy. This might be a fucking, I've never used this before, and it's like not the cleanest thing. So, all right, let's fucking get it. All right. So, to recap, Citrini, who is a popular trader and macro research quant, posts an article, and he basically lays out the AI doomer thesis over the next 2 years. He lays out a very clear scenario of what things going wrong would look like, okay? This Substack post, just to reiterate, in one day, wiped out $50 billion from the stock market on the names that he explicitly mentioned in this article. $50 billion evaporated in thin air because of a Twitter article, which is crazy. That's crazy. So here is my understanding of what just happened. Okay. So the first thing that happens is the SaaS apocalypse is real. Okay. Let's see if I can fucking whip. Let's fucking whip this out. So the first argument he makes is that the SaaS apocalypse is real. Okay. And AI is fucking good. AI is fucking good. AI kills friction. And it basically destroys jobs based off specialized knowledge or removing friction in extra steps, okay? Accounting, cooked. Travel agents, cooked. Things like DoorDash was explicitly mentioned in this article, completely cooked, okay? Because of this, how much of the stock market is built up on SaaS company revenues? A massive amount. So because AI is fucking really good, this leads to company margins get absolutely decimated, okay? $ cooked. Company margins get absolutely decimated, okay? Because their business, which relies on providing software to consumers or software to businesses, is now made hyper efficient. So the money that they make in between the margins, destroyed, okay? Because these companies are having their margins crushed, their earnings are down, their revenue is down, They only have one choice, okay? And the only choice they can make is AI spend up, human spend, watch this little sad face, human spend down significantly, right? It's the only choice you can make, okay? You're a SaaS company, and AI has killed your margins because it's really good. You can no longer take the premium that you've been taking on businesses and on consumers, okay? Because of that, you're making less money. Because you're making less money, because you're making less money, you only have one choice, okay? That is to spend less money on workers and fire your employees and to spend more money on AI, right? You get more output for cheaper. You have to find a way to make up the delta in your margins that you have since lost. This is the only natural choice, okay? And so firings going crazy, hiring's not happening, AI spend going up. Okay, they say let's use thicker lines. Let's go a little bit thicker. What happens next is, let's see. Ooh. No, did I just break it? What just happened? Now let me go thinner lines. Wait, hold on. Wait, I'm about to cook. Hold on. Okay, so what happens next? AI spend up, employee headcount down. What happens next, my friends, is white collar jobs unemployed massively. Let's go like sign. I need a job. Okay, pretty simple how we get here. Mass unemployment of white collar jobs. Now, the problem with mass unemployment of white collar jobs is, Citrini lays this out, is white collar jobs, white collar work is responsible for 50% of the entire workforce and 75% of spend. Think about that. So AI is better than advertised. It crushes company margins. Because company margins get crushed, they have to make up for it somewhere. So they fire employees, spend more money on AI. Because they fire employees, white collar unemployment goes up significantly. And now it's like fun and dandy to say like, oh, permanent underclass, AI is going to take your job. Everyone's going to be unemployed. But the problem with everyone being unemployed is that white collar workers represent 50%, half of the workforce. Half of the workforce is white collar workers, and 75% of consumer spending is white collar workers. Okay, that is massive. That's a huge implications. Okay, and so what happens next is that AI spend goes up. AI CapEx goes up significantly, right? Every company is spending more money on AI, but GDP goes down, okay? And the reason CapEx can go up while GDP goes down is that companies, SaaS companies in particular, are now able to get more output from AI with significantly less money than they were spending on their employees, okay? But the thing about the delta, the money between what they're spending on AI to get equal level output versus what they were spending on employees to get equal level output, is that doesn't manifest in excess cash, okay? The money just evaporates because they're actually making less, because they're getting less contracts from consumers and businesses, because consumers are spending less because nobody has a job, and then companies are spending less because they're making less, because everybody else is making less, because everyone's spending less, because nobody has a job, okay? And you sort of get this fucking death spiral where nobody can spend because nobody has a job and they don't have any money, so nobody can spend. And it fucking spirals. And so you get AI spend, AI capex goes up significantly, but GDP goes down. Okay? This leads right here to what Citrini articulated as a government revenue crisis. Okay, like let me do like watch this. It's American flag. This leads to a government revenue crisis, okay? Everyone is making less. They have fewer paychecks. There's less taxes to collect because no one has a job. The people that have jobs are making significantly less. And in order to stimulate the economy and keep things at least flat, the government has to spend more, okay? Everyone's making less. Government's taxing in less, and they have to spend more. It sort of leads to a crisis, okay? And so the white-collar workers is not just going to sit idle, okay? So if you had a job at Salesforce, like we articulated in the article, and you were making $180,000 a year, that's a good job, okay? That's a good job, making $180,000 a year as an engineer at Salesforce. You lose your job in the third round of layoffs, okay? Are you just going to sit there idle, or are you going to go down the workforce and take a lower paying, lower economic valuable job? Well, you're going to go down the workforce because you have a husband or you have a wife and you have 2 kids to provide for, and the food isn't going to pay itself, the bill isn't going to pay itself, and the money isn't going to make itself. And so what happens is, let's watch this. That's a car. Uber. Less money. And so what happens is that the already compressed lower subsection of the workforce just gets more competitive. Okay, you have this mass of overqualified white-collar workers that have no choice but to go further down the wage hierarchy. Okay, that means compressions get tighter. An already squeezed and struggling demographic is squeezed and struggling more, which means people are making even less, which means people can spend even less, which means businesses are making less, which means margins get more fucked, which means you have to fire more people, spend more money on AI. Government brings in less money, spends more to stimulate, and you get this negative reflex cycle doom loop that really has no stop in sight. And so what happens next is that the private credit market, private credit, bad. That what Citrini articulated is basically a focused, correlated bet on the future earnings of the same companies. And so a huge portion of the economy is backed up on investors giving money to these software companies and basically betting that they are going to return the same level of earnings they're currently returning in perpetuity. Okay? That's how this works. As long as that game keeps being played, private credit, people's investments are safe and they're with good companies. Now, it was safe when they underwrote these contracts, but the game has changed, okay? Because these software companies are no longer able to guarantee X amount of revenue in perpetuity. That's being stress tested. That's being pressured, and those contracts are being broken, okay? And so this is basically going to lead to extreme stress and blow-ups across private credit, which we've already started to see the early signs of potentially with the Blue Owl news, okay? And so what happens next? On one side of the spectrum, you have private credit, which has funded all of these SaaS companies and all these software companies to allow them to prosper. That's being stressed. On the other side, you have a consumer-led mortgage crisis. And so you have house here, The little chimney and smoke coming out. And then right here in all caps, you have foreclosure. Okay. And so on the other side of the spectrum is you get a mortgage crisis. Okay. Because what's happening right now is that there are all these people, 50% of employed people in the United States are white collar workers, okay? And they are 75% of the spending, okay? So the people that are buying vacations, people that are buying mortgages, people that are buying cars, the people that are buying houses, the economy is reliant on these people, okay? And so there are all these mortgages, 15-year, 30-year, I think they're talking about doing 50-year mortgages that people underwrote when they could afford them, okay? Like, imagine you have a mortgage when you are a Salesforce employee making $180,000. Well, AI comes out of nowhere. It takes your job. You get laid off. You are now making $45,000 a year driving for Uber because you can't get a job, because nobody's hiring, because their margins are compressed and they're spending all of their money on AI improvements. And so, can you afford your mortgage? No. Can anybody else afford their mortgage? No. And so what do? You just stop paying it, and it leads to this mortgage foreclosure spiral. Now, the problem with this versus 2008, as I understand it, is that 2008 spiraled because they just wrote bad mortgages. They wrote bad loans, okay? They shouldn't have been written in the first place. What's happening in 2026 is they were good mortgages, and the people could pay them, but they just can no longer pay them because the circumstances have changed. And so 2008, the government comes out and they stimulate the economy with $900 billion. They basically buy up all the bad debt. They buy up all the shit mortgages, and they save the economy because people are making money. People will be able to afford their houses. They just have to get out of this debt spiral. The problem with this thesis coming true through 2028 on the Citrini article is that no amount of money can stimulate this economy. Because it isn't like these people can pay their mortgages. They are just in debt. They're just over leveraged. They're just over financed. It's like, no. Their value, the economic value they provide to the world is their human intelligence, which is now being seen as a commodity, and it no longer has economic value. And so stimulating the economy is not going to allow someone that is now making $45,000 a year driving Uber to get back their $180,000 a year job as an engineer at Salesforce. That job is gone. That job is gone because Salesforce can't pay the salary because they don't make any fucking money anymore. And the money that they do make is spent on improving AI because it's the only way for them to continue their business being built profitably and evolving profitably, right? And so the job doesn't exist anymore. And so no amount of bailout is really going to, again, as Citrini predicts, stop this synonymous spiral of private credit and a mortgage crisis. Okay? And so, yeah, no. Now watch this. He uses the word no natural break a bunch of times in this article because the entire article is predicated on the idea that AI and intelligence is just going to continue to get better. And if you bet on artificial intelligence continuing to get better in an up-only slope, you're fundamentally also betting on human intelligence getting less valuable. And nothing can really stop this trend as we know it, right? Nothing's really gonna, like, what can stop this trend? It's not exactly clear what would stop this. If you believe artificial intelligence gets better, human intelligence gets less valuable, companies and businesses will continue to spend less money on headcount and more money improving AI. As the AI gets better, their margins get better. They can hire less people and focus more on the artificial side. Okay? And so basically where this leaves us, and the thesis that is being articulated is that for the first time, we are basically predicting that new tech will not equal new jobs, which is a very sobering eerie type of thesis if true. It's like, okay, you get the Industrial Revolution and, you know, everyone's a farmer. A lot of people work the land. Industrial Revolution comes and people are terrified. Like, oh my God, no, everything's going to be automated by factories. And it's like, no, well, you need people to work the factories. You get the creation of the automobile industry, right? You get the creation of factory workers. You get thousands and thousands and thousands and thousands of new jobs to stimulate the economy. And so the value of human work doesn't disappear. It just gets evolved. It just changes, okay? The jobs changed. And so as jobs get removed during the Industrial Revolution, new jobs get created, okay? Same thing when the internet happens. You get the creation of the internet and people are panicked. Like, oh my God, what do we do? The internet's going to take all the jobs. Nobody's going to be able to work anymore. It's like, no, a lot of people lost their job because of the internet and then they just made new jobs. Okay. I mean, look at the article we are reading is from a Twitter influencer, a Twitter researcher, a macro thinker, a macro researcher on Twitter, whose majority of their business is predicated on a paid Substack subscription on the internet. It's like the thing that we're reading was a job created by the internet, right? So the internet creates this massive slew of jobs, and you know, there's online and there's a million things get created from the internet. I don't have like the best examples for this. I'm gonna just cut this out in the YouTube video. What are some jobs that got created by the internet, chat? What are some like internet jobs that got created? OnlyFans. You get OnlyFans, and you get streamers, and you get drop shipping, and you get sneaker reselling, and you get clippers, and you get e-girls, and you get content creators. You get the internet economy, which eats the world. You get YouTubers. You get e-com isn't even a thing before this, right? And so the internet comes in, it changes the world as we know it, and it creates an entire economy of new jobs, okay? Now, the doom thesis, domain name squatting, e-com scammer, Miami course seller. Course sellers didn't exist before this. No TJR, no Ty Lopez. It didn't exist. Shout out TJR. That's my dog. That's my fucking dog. Creates an entire world of new jobs, okay? Now, what is being described here is that AI is the first new technological revelation that will take jobs and not create jobs. That's a pretty daunting theory because, I mean, the future of the United States economy is basically predicated on AI will be an economic boom and it will make new jobs and people will continue to work in the workforce. Now, what was laid out by Citrini is basically like, no, yeah, you need people to prompt AI. AI is better at it. You need people to manage AI. AI is better at it. You need people to design AI. AI is better at it. Any new job that you could hypothesize would be created via AI, AI is better at it. That's the thesis that was laid out by Citrini, and that sort of breaks our social contract of the economy right now. And so what he predicted is spy. Fuck, I spelled it wrong. How do you spell this? 3 letters. How do you spell it wrong? It's 3 letters. 3 fucking letters, man. Get a fucking grip. What he predicts is spy minus 57%. And the government really has no choice but to mass print our way out of it. But the problem with mass printing our way out of it is that it doesn't really solve anything because you still can't pay your mortgage because you still don't have a job because it's been automated away by artificial intelligence. And so this is the entire thesis, to recap what we just read, is 1, SaaS apocalypse is real. AI is better than advertised. Jobs based off specialized knowledge or friction are gone. Accounting, travel agents, DoorDash. Because of this, company margins get crushed. All these companies are forced to fire aggressively and increase their AI spend. This leads to a mass unemployment of white-collar jobs. Now, the problem with laying off white-collar workers is they're 50% of the workforce and 75% of the consumer spending. They're basically the U.S. economy, okay? This means AI CapEx goes up, GDP goes down. Everyone's spending more on AI relative to what they're spending right now, but they're spending less in general because there's just generally less money, okay? We're calling this deflation. This leads to a government revenue crisis. Fewer paychecks, less money to collect on taxes, and the government has to spend more to keep things stimulated. Okay? These white-collar workers don't sit idle. They basically downgrade their jobs and their lifestyle. That was the example of the Salesforce employee making $180K, now making $45K a year driving Uber. The lack of forward earnings for these companies puts extreme stress on private credit. We're already sort of seeing it with Blue Owl. And then in its own silo, synonymously, there is this mortgage crisis, which is that nobody can afford to pay the mortgage that they underwrote when they're making $180K a year, when they're now making $45K a year. Okay? There's no natural break because as AI gets better, it only increases demand for AI and decreases demand for human intelligence. And it's not like the US can backstop these mortgages and just print us out. And the final snipe, nail in the coffin thesis at the end is it's the first tech innovation that deletes jobs and doesn't create any new jobs. Okay. And so Citrini is predicted 57% in this story, fictional story, 57% dump on SPY back to pre-2022 levels. And the government has no choice but to basically print our way out of it. Okay. Subsidize. If you lost your job for AI, here's UBI. Everybody's getting paid. It's like, there's one or two things. If you lost your job for AI, here's money from the government. Or because the AI companies are making all of the money, they have to now share it with the consumers. We're going full socialist. One of the two things is probably going to happen. UBI on two sides of the coin, okay? It feels. If this scenario plays out. Now, I'm not backing the scenario. I'm just re-articulating it, okay? I'm summarizing it. Okay, but he basically predicts those two things. SPY gets destroyed. The US has no choice but to print our way out of it and spam UBI to everyone because everyone's miserable and the economy desperately needs to be stimulated. Now, something to understand about this scenario, which we're calling deflation, is that nobody that's alive has actually traded deflation before. We've not traded a deflationary economy before. And so I don't really know what the trade is here. I don't think anybody really knows what the trade is exactly, but this is the type of scenario, if it were to occur, that they would make the movie about or write the book about the person that figured out what to buy when everything broke. This is that type of scenario. You get a 2008 type of opportunity. If this were to play out as Citrini articulates, they would make a movie about you. If you made this trade, they would make a movie about you. They would make a movie about you. No one has ever traded a deflationary market before. It's never been done. No one's had to do it. It's never had to be done. And so this is the type of market where Michael Burry made, $2.5 billion. This is the type of market which they would make a movie about you. This is the type of, this is that. And so finding this trade and finding what to do if this scenario is true is probably the single most important decision that you'll come to over the next couple years. It is. It is. Now, I say it like that because it's one of these scenarios in which we have to decide for ourselves, do we believe in this? Do we not believe in this? Or what parts do we not fundamentally believe in? Okay? Great post to follow this up, actually. Thanks, Malcolm. Pretty funny that after all that ink spilled by the less wrong rationalists, the two things that finally moved public consciousness on AI safety were an LLM-generated slop post by a fraudulent startup founder and a weekend sci-fi primer from a financial analyst. The world is run by the bold and Epstein-matically brazen. Never forget that, bucko. Period. The value on being a good poster, understanding narrative, and understanding thesis is the highest it has ever been. The highest it's ever been right now in this moment. If you can understand why things trade the way that they do, I thought I said Epstein-matically. I'm not going to lie. Can we keep that in? Tell the editor to keep that in. I thought that was a joke. I genuinely thought that was a joke. Can you keep that in? I said Epstein-matically is crazy. Point still stands. Epistemically. Point still stands. Point still stands. And so there's a chance that was really funny, honestly. There's a chance that this is just deflation. It's where we're heading, and that Bitcoin's been front running it. There's a chance. Bitcoin's been front running it, which is what I articulated the first time Bitcoin dumped. And I said it feels like it's sniffing out broader weakness across everything. But I'm going to basically close the YouTube video part out right here and say figuring out what you believe to be true from this article, what you believe to be fiction, and what you think the second, third, and fourth order effects are will absolutely lead to asymmetry god trades in the market. There will be some of the biggest winners of all time trading the uncertainty into AI. And my entire focus is going to be to figure out how to navigate this. This is all we're going to talk about. How do we navigate this? Where we're going. It's a new world. I think we're doing a pretty damn good job of it, covering it, being the most relevant, the most on the ball. And that's my summary. Do you feel like you understand the article now? Like, dude, by the way, okay, YouTube video over. Back to like stream. This is, I mean, come on. I fucking cooked on this. Can we be on? I mean, did you or did you not understand exactly what happened in this? I mean, come on. Come on. W reader, W drawler. Huh? Like, W fucking drawler, bro. Okay, I would like to announce my official partnership with the Base blockchain. I will be coining this art and auctioning it as an NFT on Zora. I will be auctioning this as an NFT. It's like, no. Dude, my OpenClaw is like ripping stuff right now. What is it doing? Bro, what is it fucking... Why is it typing? Stop. Jesus, man. OpenClaw delete all emails. Chad, I hate to be that guy, but I gotta get up for one more second. I need to go refill this. My throat hurts. And we have a lot to talk about. And what we have to talk about now are the implications. So, all right. BRB. Bro actually gave it root access to his life. Andrew Tate was right. Sorry, I gotta take a quick one. BRB. What we're gonna cover next is the implications. The DoorDash CTO reply to fucking Citrini as well. Crazy. Mom, if you're listening, I love you. Malcolm, am I good? I'm in a new chair to my back. I'm dying. I'm suffering. All right. Now, fuck, I didn't fill my water up. Get a Miller, brother. What do you think I'm sitting in? Probably say get a Miller. Fuck, you think I'm sitting in, man? It's like, what? Come on, bro. Crazy. DoorDash, crazy. Crazy, 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 crazy. So, yeah, also his point is like the greatest losers on this friction business. I mean, he basically said friction businesses are cooked, accounting firms are cooked, credit card companies are cooked, and he said the entire economy of India is just done. All of it. Like, he just basically said India to zero. Like, aggressively, fast. India to zero, period, was what he said. Like, it was like, yeah, like, he basically was like, yeah, MasterCard's in trouble. MasterCard's in trouble. Visa, not great. They're just going to delete India. It's like, Jesus. Again, India's like, deleted, gone, done, forever. I'm like, all right, fuck. And yeah, these are the companies that were explicitly mentioned today. Visa, I think it's American Express, DoorDash, and MasterCard. So, yeah, I mean, look, this is deflation, potentially. The thesis he outlined is deflation, and nobody really knows how to trade it. No one's traded it yet. Nobody's really traded it yet. I don't think anyone really knows what to own if that scenario is true. And man, if we get UBI, things are going to get crazy. Things are going to get crazy. So my biggest takeaway from this, first and foremost, is posters run the world. Posters absolutely run the fucking world. And so I don't know what jobs are or aren't going to get displaced by this age of AI anymore. But brother, I'm marked safe. Twitch streamers are marked safe, brother. Because can an AI get on stream and have to pee every 30 seconds and then do a shit interview and articulate a bad segment? It's like, I don't think so. I'm marked safe. Okay. And on a serious note, I mean, this is crazy, dude. This is Bloomberg by Matt Turner. Bloomberg. DoorDash and American Express led declines in software and payment stocks on Monday after Citrini Research published an article detailing a hypothetical scenario and the impact AI could have on markets in the global economy. Bloomberg. Like, this is, I mean, bro, again, I want to just re-enunciate exactly what's happening here is that a Twitter influencer, an influencer researcher, like no different than really any of us. He's one of the best, but a researcher posts a hypothetical fan fiction essentially. And Bloomberg is talking about it. And, you know, big money is selling stocks because of it. Posters quite literally run the world. And you really got to think, like, I always wondered this about crypto. Humans love stories. Fear and panic sells. And how many people are responsible for the narrative of these billion-trillion-dollar companies, right? Like, I always wondered this with crypto. Is like, you know, crypto is a multi-trillion-dollar asset. How many people actually matter if we are narrative-based in determining the vibes and the thesis and the price action of these coins? It's not very many. It's a relatively strong, small number. It's a relatively small number. And so your ability to articulate a story, present a narrative, and pick a side is immensely valuable in the age of AI. So I'll read that one next. Something I really like here is, so I quote tweeted this, and I quote tweeted it with our favorite article of all time, Mega Church Time. Do you guys remember Mega Church Time? It's my favorite article of all time. Base 16Z wrote it, and it basically reads as such. Footnote, it's just the back. Not just American Eagle, but all of my trades this year, and I believe an underexploited edge in today's mimetic financial markets, is growth investing in some narrative that will become, quote, the one note of the internet that day. There have been many available trades along Pareto virality thinking, i.e. DeepSeek went viral past a certain threshold, it was guaranteed to 10x in virality. free put options trade. Sailor Green Dot virality this Sunday was guaranteed to accelerate Monday. BTC puts trade. This Citrini article went so viral, it captured the zeitgeist of the entire internet, all of FinTwit, and stocks moved because of it. You could have made no trade over the last 3 months or whatever, bought puts on the companies mentioned in this article, and made money off no fundamentals, no PE ratio, no earnings, no revenue, nothing other than pure virality. Okay? All markets are going to trade like crypto. All markets are going to trade like crypto. Virality is everything. It's not the thing. It's the only thing. It's everything. And it's one of my favorite tweets in a long time is that guy who didn't grow up trading crypto. Quote, wait, tweets and blogs can't be the new fundamentals. Well, Citrini just showed in front of the entire world to everybody that tweets and blogs are the new fundamentals. The world is just going to trade increasingly based off of vibes, based off of narrative. Something we've been talking about for a while, and I think it's starting to actualize. I mean, this was pretty validating for me. I'm going to be completely honest. This whole event was pretty validating to me. Really, it was. To me, I've always looked at markets through my like novice brain as being relatively interconnected. Crypto trades like stocks, trades like crypto, trades like Roblox, trades like CSGO skins, trades like Pokemon cards, trades like everything. Obviously, stocks have a layer of fundamentals that crypto don't, but they're starting to diffuse into the same thing a little bit. And again, I can't overemphasize how important I think this moment was, knowing that this is possible. That if you write a good enough piece that goes viral enough, you can move. I mean, bro, Visa moved $20 billion. MasterCard moved $20 billion. This isn't like you pumped a shit coin from $1 mil to $2 mil to $5 mil on a viral post. This is like, Fortune 500 companies. This is S&P companies, biggest 500 companies in the world, moving on a Twitter post. That is real influence. That is real. That is a real moat. That is a real description and realization that the game has changed a little bit. It's like there's going to be more Elons, right? Tesla trading at 400 PE because we fucking love Elon. There's going to be more Palantirs trading at 250 PE because Alex Karp is like a fucking legend. There's going to be more founder stories, more bubbled PE ratios, and more momentum. More momentum, more narrative, more momentum. It feels inevitable, right? Am I off on this? Like it feels very inevitable to me that this plays out that way. And so the DoorDash guy replied because God, my back hurts so bad. I'm so fucked. The example he uses in the article is DoorDash. And so the CTO, Andy Fang of DoorDash, which is a $71 billion company, by the way, replies, and he says, we definitely believe agentic commerce will be transformative in the industry. DoorDash will need to continue to earn the right to service customers. Blah, 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 blah. We're focused. That's why we're so focused on the agentic commerce. We build for ourselves and our merchant partners. The ground is shifting underneath our feet, and the industry is going to need to adapt to it. Cope. They're in trouble. They're all in trouble. No one knows what to do. All these founders are like, what the fuck is going on, man? Nobody knows what to do. Everyone feels like they're in trouble. It's a very bizarre spot. The robot delivery thing hasn't done very well. All right, let's what else do I want to show you? Here. I have two. One. Another realization I've had from this is that crypto is just really early to things once again. I mean, once again, we are like hilariously early to the AI psychosis doomer. And it's validating to see all of TradFi pile on to this thesis that, I don't know, Prime Good Alexander was ripping this in 2025, 2024. I was crashing out over AI psychosis in 2024. Like, Good Alexander basically articulated the Citrini thesis like over a year ago. Funny enough, when I met Citrini, it was with Good Alexander. It was honestly a generational AI doomer link. Like, generational AI doomer link. I was with Good Alexander. And Zoran Mamdani was there. It was like a generational link. One more take on this is, I think what's fascinating about Citrini's piece is it isn't necessarily a new idea for those that have been tapped into what's going on and thinking about it all. But smashes the common knowledge game around it, and now it's becoming something that everyone knows about and that is fascinating to watch as the narrative emerges itself. A tiny fraction of the population knows what OpenClaw is, and even a smaller subset has one set up. There's a lot for people to come to terms with. Real. Really good post. I think, again, I just continue to feel that the game, let's call it the game that we play, the intersection of AI, crypto, TradFi, FinTwit, everything that we play on, whatever the stream is, the manifestation of, it's just hilariously early to shit. And so, like, I don't know, when did Frank first post about Opus or Claude Code? It's like, you're hilariously early to stuff. And I think trusting your guns and not being afraid to make decisions, sometimes rash decisions based off what you hear or read or discover from crypto Twitter, is not consensus. You're almost always earlier than the zeitgeist. Always. Almost always early. You always are. And so it's interesting to see a thesis that is seemingly been covered a lot on CT go mainstream and then nuke the stock. I mean, nuke the stock market a little bit. And so, yeah, man, that's basically the Citrini article. I want to just reemphasize because I need a banger clip out of this. This is for a clip. I'm Mark Safe from the AI Doomer Permanent Underclass, okay? I'm Mark Safe. AI media is one of the only sectors immune because we're fucking entertaining and AI can't do this stream. And yeah, you just can't arb us out the same way you arb out SaaS. And so me and TBPN, Mark Safe. Me and TBPN are going to be all right. Me, TBPN, and Kai Cenat are good, bro. We're good. So I know AI can do the stream, but I needed a good clip out of it. So I'm going to move on to, actually, there's one more section I need to cover real quick. The trade. Let's do this real quick. Jez made a good post. If you read Citrini's piece and you found yourself nodding along, may I introduce you to my bags, as seen in 2028. Bitcoin. If you agree in both nominal GDP up on productivity, yet zero discretionary spend, that money has to go somewhere. Usually into assets. Global attention shelling part asset that AI can self-custody. Stablecoins, Sky. We love stablecoins. Decentralized exchanges. Exchanges, I think, are big beneficiaries of this. Hyperliquid and lighter. Again, GDP up but discretionary down equals more investment in speculation, as has been happening for the last 10 years. Decentralized exchanges are also the most credible way for AI agents to express views, since speculation is by far the most efficient expression of intelligence resources. I still like Bitcoin as my expression of AI doomerism. I really do. Fuck, what did I just close? Reopen close tab. I don't love this tweet. What's this last one? Michael Berry. Yeah, I continue to think Bitcoin. Now, I think I'm relatively I don't know. I don't fully understand the implications of this deflation thing. So I've read a lot that, and talked to Tulip King, that if deflation comes, hard assets are like not great. And so what happens to Bitcoin and gold? I don't know in that scenario. One of the features that we played around with is bonds. Like locking in 4.5% bonds is sort of interesting. I just don't think it's a thing you have to force. I think our job now is not to like force the trade, but to really try to force a understanding of how we think things are going to play out. That is where I think we should be spending most of our time, is like, what do we believe? Do we believe this is true? Do we believe parts of it are true? What parts of it do we believe are true? And how do we think that it plays out? So that's the Citrini section. That's the segment. That's what I have for you. What do you guys think? Tell me what you think before we move on. What do you think? Posters run this shit. Posters run this shit, bro. Thanks for going for it. Thank you, man. Top 5 segments of all time, really? I'm not done, by the way. I have a lot to talk about. I have a lot to talk about. How about we do a quick intermission video? You want a quick like intermission video? I have a 5-minute video for you to like fucking calm everybody down for a second. Let's watch it. AI TG arrow be studied. We're just gonna be on the ball, dude. We're just gonna be on the ball. Bro, we're just gonna be on the ball. I don't know what else to say. Like, there's just not gonna be many people that are deeper on what's happening than us. This is just a fact. Okay, before we get into some AI stuff, let us cover. I have a really fun video. I'm gonna read you the title. Tell me if you want to watch it. It's 5 minutes. I'll read the title. Tell me if you want to watch it. Okay. The title is Freakonomics. What prostitutes can teach us about economics? Yes or no? 5 minutes. Who said fuck no? What? Obviously yes, by the way. I'm not giving you a choice. I just was asking. Dude, my fucking clawbot keeps opening shit. This is obviously yes. All right, let's watch it. I'm gonna get a water while we watch it. My feed is just so good.
Forward TV, the world is thinking. Forward TV, the world is thinking.
I ended up meeting the woman, fascinating woman, and actually what I ended up talking to her about was about business, because I'd been, after Freakonomics came out, I was anointed as a business expert, and so a lot of CEOs would call me and try to hire me, so I'd had a chance to talk to a lot of CEOs. But once I talked to this prostitute about her data for about 10 minutes, I thought, my God, I've got another 30 minutes of brunch. I got to kill topics. So I just talked to her the same way I talk to CEOs, asking her about her business or industry. And she actually gave fantastic answers. She really seemed to understand her industry pretty well. She was a college-educated woman who had quit an $80,000 a year computer programming job to become a prostitute in order to do it. But when I finally tripped her up, it was the same way I always trip up the CEOs. Because I asked her, how do you set prices? Okay? And the thing is, setting prices is the hardest thing. Nobody knows how to set prices because, you know, economics theory tells you how you should set prices, but nobody follows it. Okay? And so she gave me the same kind of terrible answers that CEOs give me. And her particular answer was, well, I just looked out on the internet to see what the other women were charging. And a lot of them were charging about $300 an hour, so that's what I decided to charge too. Okay, so that drives an economist crazy, right? There's the inverse elasticity pricing rules. I mean, if you know your marginal cost and you know your elasticity of demand, you know what price to charge. So I asked myself, well, was there some question that I could get at that would help me figure out whether she was charging the right price? And then I remembered she had told me that she had a dedicated phone line that only her customers called her on. So I said to her, how do you feel when the telephone rings. And she said, well, I'm kind of indifferent. I don't really care whether my customers call me or not. Sometimes I don't even pick up the phone. And I said, my God, you're a local monopolist. You have a downward sloping demand curve. If you could sell one more unit of your good at the same price as the last one, of course you'd want to. You can't possibly be optimizing your pricing. So she looked at me completely blankly. Economics wasn't really her thing, obviously. But again, I wasn't there to maximize her profits. I was just trying to get access to her Palm Pilot. So I left the issue. But it turned out, since I teach at the University of Chicago, I teach a course on the economics of crime. And as I started studying prostitution, I thought, well, maybe I shouldn't add a lecture to my undergraduate class on prostitution. But it's hard to write a good lecture. As I struggled to do it, I suddenly had this thought, well, why don't I just call my new prostitute friend and have her come to the university and give the lecture for me? Well, I called her on the phone. I said, how would you feel about coming to my class? And she said, oh, no, I'm a very private person. I'm a terrible public speaker. I could never do that. So I know a lot about economists and enough about prostitutes to know that we share one important point in common. There's no such thing as can't, right? There's just what price you're going to do it at, right? There's always a price for an economist, and there's always a price for a prostitute. So I said to her, well, what if I pay your hourly wage to teach my class? She said, oh, my hourly wage, I misunderstood. Yeah, I'd be happy to teach your class for my hourly wage. Anyway, she comes down, teaches my class. Unbelievably great lecture. Turns out a third of my students said that it was the single best lecture they heard in their 4 years at the University of Chicago. Okay, which is a pretty sad statement about what me and my colleagues are doing in the classroom, but I think not inaccurate. It was great. But after she spoke, one of the students, we had Q&A, one of the students said, how much do you charge? And she says, I charge $400 an hour. Okay, and I become irate, because I know she charges $300 an hour, and I'm paying this out of my own pocket, right? I can't go to the National Science Foundation and say, well, I'm too lazy to teach my own classes, so I hired a prostitute. I'm going to need an extra $400 on my grant. So I'm on the side of the room, I'm just seething at the idea that, I think we have some kind of relationship, and then she rips me off for another $100. And then the next student raises his hand, and he says, how did you decide how much to charge? And I'm standing over there. She looks at me. She's got this big smile on her face. And she says, the very first time that I was with Professor Levitt, she says, the very first time I was with Professor Levitt, he convinced me my services were far more valuable than the $300 I was currently charging. I raised my price to $400, and it has been the best business decision I've ever made.
Movie.
That was pretty good. Come on, that was pretty good. That was a good video. That was a good video. That was awesome. That was so awesome. Wait, let me send this message real quick. That's what my algo looks like. I just pull shit like that off the daily. I just pull shit like that off the fucking daily. So, all right. Next is 2 major announcements in AI. Okay. Number 1 is Anthropic came out and they made an announcement that's very relevant to our China maxing stream. And they said, we've identified industrial scale distillation attacks on our models by DeepSeek, Moonshot AI, and Minimax. These labs created over 24,000 fraudulent accounts and generated over 16 million exchanges with Claude, extracting its capabilities to train and improve their own models. Now, they basically came out, Anthropic, and said, China is stealing our models. They are DDoS attacking us. They're sending fake agents to try to understand our weights. They are stealing our models. And this is very relevant because it has severe implications. One, understanding how close China actually is very important to understanding where we are. And as this accelerates, the AI arms race concept gets more real. We talked about this in China Maxing. This is a cold war to intelligence. Think about the implications of what we just read from Citrini, which is basically saying the economy is going to implode. I mean, this is a cold war arms race. Make no mistake about it. It's an arms race. This is a arms race. And it's a national security risk that the US beats China in the intelligence race. And so China stealing our models and keeping par with us is a huge problem. Now, there's two things here. Number one, is China having a solidified superior video model for AI gives them some level of validity that they're also producing better LLMs, or that they're, i.e., not stealing and they're actually just putting out good shit. Like, CDANS is just better than whatever video models we have. And so if they're winning in video models, then there's a reasonable chance that they're also winning or putting out quality on the LLM side. And so the US saying that we're stealing has less substance when they're winning and we're losing in video models. The second reason this is interesting is DeepSeek has announced they are releasing their new model very soon. Okay? And if you remember what happened the first time DeepSeek launched their model, NVIDIA dumped 10% intraday. It was like Citrini on trend. NVIDIA dumped 10% when DeepSeek first launched. Okay? And so now DeepSeek announces that we are about to launch our new model. And the same day, Anthropic comes out and is like, yo, China is stealing our weights in sort of a defensive mechanism. I don't know. What do you think? I believe that China is attempting to, like, I believe the US is ahead. I believe we are susceptible to China stealing our weights, but I also believe China is way further advanced in AI than we are publicly willing to admit, which bodes very well for a government backstop to US AI spending. It bodes very well for AI capex in the US to go up only. And it also means that the thing is way more competitive than a lot of these people are willing to say publicly. I think that's very true. What's the third thing that I have here? Oh. Here's the other thing is on the topic of stocks are trading like fucking crypto. This is pretty, also I closed the YouTube tab. I don't know if YouTube's still live. On the topic of stocks trading like crypto, Anthropic right now is basically just like one-shotting companies. So they come out and they said, I don't even know what this is, COBOL modernization. Anthropic says Claude Code can automate COBOL modernization. And they throw 3 tickers in here that do this. And so the 3 tickers are as such. One is IBM. Look at this. Look at IBM. Off a cliff. Why is this, do I have like multiple things on here? What do I have on here? Why is it like retarded? What did I do to my fucking trading view? Am I hiding something? But what did I do to my trading view? Why is it like the percents? Why is it weird? No, like why is it like gay? I actually don't know what I did to it, but irrelevant. Point still stands. I'll fix it later. Here's IBM. Got crushed. This is 15-day. 15-minute. Change it back from percent. Yeah, how? What? I don't even know how I got to percent in the first place. I've never done that before. Oh. There. Thank you. Cool. Here's IBM. Gets destroyed on the news. 1. Second, ACN. Destroyed. Down 7% today. Third one, CTSH. Destroyed. Down 6%. And so we're basically in this spot right now, funny enough, where every company is just like a fucking Anthropic tweet away. Oh, this is a banger, huh? Every company is an Anthropic tweet away from a minus 20% candle. Everything is just trading on narrative. Everything. Is like, can Anthropic actually do this thing better than IBM? I don't know. They said they're doing it. They're working on it. Everyone's scared about AI. Like, seems like yes. Everything is narrative. The narrative says yes, so the answer is yes, period. It's pretty wild how it's playing out, if I'm being completely honest. But dust off your fucking narrative hat, because this is where the world is headed, bro. It's where the world is headed. Okay, what else do I have for you? Okay, here's number 1. On the topic of AI being a war proxy, is number 1. Dario from Anthropic is being summoned by the Department of War. He will meet with Pete Hegseth tomorrow morning. The Axios report quotes a defense official who claims Hegseth will be promoting Dario with an ultimatum. And so what happened is the US comes out and they say that they used Claude to capture Maduro. Anthropic comes out and it's like, hey, I don't want my tech being used to kill people. And the US is basically like, oh, really? Well, then you're a national security risk. And we're going to pull all of your contracts and we're going to blackball you and we're going to try to destroy you. You don't, oh, really? We can't use you to kill people? Fuck you. We're coming after you. And so he's now been summoned. Summoned is the word that was used. Summoned, like a Pokemon. By Pete Hegseth, the Department of War. And they're going to have a discussion. Quote, Anthropic knows this is not a get-to-know-you meeting. A senior defense official told Axios, this is not a friendly meeting. This is a shit or get off the pot meeting. This is a, Dario, are you prepared to fucking kill people or not? And so, this is Dario. And this is Pete Hegseth. Whatever the fuck he wants Dario to do, Dario is doing. He is going into the lion's den. The Department of War, brother. Founder of Anthropic, CEO of AI company versus the Department of War. Are those fake weights, by the way? Is he benching 315? Really? Ah! Let's go. Fuck ass. Look. 10 kg. I think it says 315. The video is fake. Do you think this guy can bench 315 that calls him out? No. I don't. You think this guy can bench 315? No. But look. AI and LLMs are a military weapon is what they are. They're a military fucking weapon. They're a proxy. They're going to get government contracts. They're going to get defense contracts. They are a weapon. The last thing basically is some crypto stuff. One, Vitalik is selling again. I don't blame him. I feel like all these SaaS companies now understand Vitalik. They're like, fuck, I wish I was selling this much. They're like, I wish I was selling like Vitalik, just destroying charts. There was this crazy AI thing that happened. Look, it's funny. As down bad as crypto is, you just get AI experiment after AI experiment. Still happening. And this OpenAI employee built this this AI called Lobster. And the goal of it was it had like 50K or whatever, and it was supposed to turn into $1 million. And so I think it made a lot of money. It was claiming it claimed the fees of the token. It like made a lot of money. It was up a lot of money. And then it accidentally sent 100% of its supply into some guy that like prompt injected it begging for Sol. And so the guy who received it, this guy, sold 40K worth of the tokens. And this thing dumped to 3 mil from like 15 mil, 10 mil. And it basically instantly rode back. And it's back up at like 13 mil. And people are like pretty excited about it. It's cool because let's see. Look, I'm pretty tapped out about I'm pretty tapped out from on-chain right now just because it's a mess. But there are AI devs from Frontier AI Labs that are experimenting with agents, and it's just not going to stop. Crypto will continue to be the money of the internet. It will continue to be the playground for it, and we will just see an increasing amount of Lobster-esque type of experiments. This is coming tomorrow, which will be a big deal. Major investigation dropping February 26th on one of crypto's most profitable businesses where multiple employees abused internal data to insider trade over a prolonged period of time. This will be pretty nuclear when this drops. Who do you think it's about? Let's speculate when we don't know anything. Mexi, huh? If it was Mexi, I don't think he would tease it. Anyone saying Binance is dumb who works at BNB chain? I don't think so, bro. I don't think so. It's Meteora. Yeah, I guess it could be Meteora. Meteora would be pretty nuclear. Haven't we known that? No, he took like he took grants from Binance, but he didn't like. I think Binance like gave him money, but I don't think he like works for Binance. No, he doesn't work for Binance. It's different.
Weird.
Here's an explanation of what we think it could be. By the way, I watched this actually
with World Liberty Fi and USD1. This is the
people think it's World Liberty Fi, but I don't think World Liberty Fi is one of the most profitable crypto businesses ever.
Token foundation that the Trump family, like Eric Trump, has supported since day one. And today, some things are kind of lining up, and I want to make it clear I'm not making any accusations in this video. I'm just providing you with everything that's going on, so let's look at it. It's not really uncommon that something's down right now, as the crypto market, as you know, is getting destroyed. But what is uncommon was USD1 appeared to nearly be depegged today, all right? And I'm going to get to how this gets even crazier in a few minutes, but it almost looks like it lost its peg, and then Eric Trump decides that he was going to go back and delete some tweets. So he deleted posts about another amazing week for USD1, and then he deleted another post with amazing few days for World Liberty Fi, incredible work for the project of USD1. So these are posts that he was retroactively going back and deleting. Now, the crazy part about this is all after a ZachXBT post, which if you're not familiar with ZachXBT, he's a crypto investigator. He's actually the most respected one in the space. And today he announced that a new major investigation is dropping on February 26th. That's 3 days from now. One of crypto's most profitable businesses where multiple employees have used internal data to insider trade over a prolonged period of time. All right. So he put this out, and it looked like after this post, Eric Trump went and retroactively deleted post, and USD1 nearly got depegged. I am not saying that this is for sure World Liberty Fi or USD1 related, but if you're looking at everything kind of going on in real time, you're probably thinking around the same time as me is that this looks very suspicious. And even if it's not directly them, like, was it, is there like false guilt there?
How could it be Axiom? What is Axiom insider trading? They're not like launching tokens. They have no upside anytime. It's not Axiom, bro. They make too much fucking money for it to be Axiom.
There's so many companies that this could be. I really think there's going to be a prediction market like PolyMarket that use insider data to be able to trade on prediction markets. But I don't think it's completely out of the question. Trade on prediction. There's going to be a prediction market. Is there like false guilt there? There's so many companies that this could be. I really think there's going to be a prediction market like
I don't think it's a prediction market either. I mean, he's like one of the most profitable crypto companies. It's not. I don't think it's going to be a prediction market. No way. There's no way.
Market that use insider data to be able to trade on prediction markets.
Like, what insider data do they have even? It's not a prediction market. It can't really be It can't really be an exchange. Well, it could be an exchange, but I don't think it could be a prediction market. Those are like they're not like listing tokens. It's much, much, much harder for it to be a prediction market. I don't think it's a prediction market.
But I don't think it's completely out of the question for this to be World Liberty Fi. I do want to clarify, I do still hold World Liberty Fi. I've made a lot of videos on it. I still think that outside of all this, that it had like
TG, okay? He moved to communist NYC. Now we're talking about China every week, bro. I'm just trying to give you the news. I'm trying to keep you fucking most relevant, bro.
I like the token, but this is kind of just like the situation that is upon us. So since all this happened, since ZachXBT made this,
brother's making a video about how World Liberty Fi is about to get exposed with ZachXBT, and he's like, yeah, I still hold it, by the way.
Post.
You don't have to do that.
Since Eric Trump went back and allegedly deleted some posts, and since all that, there's two things that did happen. One, World Liberty Fi made an official statement. They said a coordinated attack was launched against USD1 this morning. Attackers hacked several World Liberty Fi co-founder accounts, paid influencers to spread FUD, and opened up massive World Liberty Fi shorts to profit from the manufactured chaos. It didn't work. Thanks to USD1's sound mint and redeem mechanism and full one-to-one backing, we are trading steadily at par. No scammer can shake the long-term commitment of the entire World Liberty Fi team and co-founders to USD1. We encourage users to rely on verified channels for accurate information. So with this being said, USD1 did depeg. That's good. That's good news because there's no actual risk there. I did see coordinated attacks about Eric Trump deleting posts, but those posts could have been deleted. And I don't really understand the World Liberty Fi co-founder accounts were hacked.
Pump Fun one is weird. Like, why would it be, is it Pump Fun? Pump Fun. I don't think it's Pump Fun. Oh, this has a lot of volume. Wow. This is a lot of volume. Holy fuck. Not $2 million volume in today? I mean, I want to buy no on Axiom, I think. You can't really get any size in. Fuck my life. There's not enough volume. I don't think it's World Liberty Fi either. Like, if you were going to go after the Trumps, I don't think you're farming it on Twitter. You're just going jugular. Jugular, right? If you're going after the Trumps, you're just doing it. I don't think you're, farming the Trumps. Meteora, because I mean, I thought this was public by Meteora. I thought we knew this already. Like, remember the whole, I mean, post Libra, there was the whole, the DeFi tuna guy made the video that everyone was sniping Meteora launches and shit. I thought we already knew this about Meteora, that they were insider trading, doing weird shit. They launched Trump. Nah, I don't know what they launched. Kanye for sure. Hawk Tua, I think. Hayden was like proactively involved, maybe in the blast radius. It doesn't have to be something new per se, but maybe he just like has the evidence now. I don't really know on the Meteora thing. That's a weird one. Yeah, probably fucking is. I mean, dude, I don't think it's pump fun. Like, you got to think incentives here. Pump fun is so rich, bro. You think Alon's going to go to jail to insider trade Penguin coin? Like, bro. Also, what can you even insider trade on pump fun? I mean, I guess they could buy and then tweet, but they're sending shit to 5 mil. Like, bro, there's no way. It's not pump fun. This is a decent no buy. It's, bro, Alon's too rich for it to be pump fun. I might buy this. Bro, Alon? No, he's too rich, dude. You got to understand, these people have too much money. It's not Binance. It can't be, like foundationally can't be Axiom. Who's buying Axiom? What are the comments saying on this? Why is Meteor pumping? He has OpenSea, bro. He said profitable. It's not OpenSea, bro. Deck screener, come on, dude. This guy's a good amount of pump fun. This guy's a lot of pump fun. Axiom, yes, really. Deck screener could be decent, but what? But what? Insider trading what? Like, what is Deck screener insider trading? It can't be any of these. Tether? No. Aave? No. Athena? No. Hyperliquid? Impossible. Wintermute? No. Upbit? No. Bybit? No. Jupiter? No. Coinbase? No. Definitely not. Binance? No. This makes sense. Mexi? Maybe. I don't know. It's a weird spot, huh? It's just like nothing's going up on a Mexi listing, right? Like they're not pumping. Is Mexi pumping shit? What's Mexi pumping? What else? Weird price rip here on Meteora. First of all, Meteora isn't very profitable compared to other crypto businesses. What's his actual tweet? Major investigation dropping on February 26th on one of crypto's most profitable businesses. It's most likely Binance. I don't think it's Binance. Do you think the person who's insider trading and is about to get exposed knows they're about to get exposed and they're betting on PolyMarket with insider info? Might as well, right? Like if you already know you're going down, you might as well fucking. Wow, this is crazy, huh? No. Jane should accused of insider trading that helped collapse Terraform. It's crazy. It's like 4 years later. Crime is not legal. 4 years later, they come after you. 4 years later, they come after you. Crime is not legal, bro. They catch you. They're just slow. Nothing will happen from this, too. It's just fucked. Billions of dollars evaporated. Nothing will happen to anybody. So whack. Nothing will happen, dude. I mean, Zach XBC probably insider trading like crazy on what? What would Zach XBC have insider info on? That's a whack take. You know what's funny about the on his own market? Dude, stop. He couldn't even make that much. I mean, like he could, but there's 2 million volume. He can't make that much. You know, I quoted this. I want to reemphasize it again that because it got lost in our sauce, that the guy who moved $50 billion in the stock market today is a crypto bull. Like the only crypto bull remaining. It's crazy. Stablecoin bull. Let's see what stablecoin print looks like. This doesn't even move. One day this will print up only, and you can feel good about crypto. One day this will print up only. That day, unfortunately, is not here yet. One day this will fucking print. What else did I want to read? Oh, here's a good tweet for you. I'm still in crypto because I don't trust the government or want them in control of my money. The Epstein files indicate a cartel sex trafficking children operates the money supply for its own benefit with impunity. Like, how do you look at that and say, let's go all in on fiat? Yes, I realized Epstein was heavily involved in crypto. I thought about this a lot. The TLDR is that Leon Black didn't pay him hundreds of millions of dollars in Bitcoin, and he was never in meaningful danger of being unbacked. So crypto wasn't actually essential to the operation of the cartel. Going through the emails, there are virtually no examples of him like sending Gates a USDT address. The system allowed Epstein to operate because Epstein, in all probability, was part of the system. The question is ultimately, do you want a cartel actor in control of the money supply, or do you want an algorithmic system where individuals don't have to trust a central actor? And that kind of question, in my view, is definitively resolved. The gold question, i.e., is gold a viable money primitive, I think is a separate from this. Essentially, the internet/international commerce is essential to the economic freedom in a fracturing world order, and individuals cannot believably transact in gold without crypto rails. So it's a question of what the correct rails are to facilitate a break from the fiat system, because the fiat system is terrible. It is very clear that the answer is blockchain and based assets. Other people have their reasons, but this is an important one for me. And then a follow-up is, Citrini sent AMAX minus 8% intraday and you're fading on-chain agents. It is just very clear that it's happening with understanding why crypto, social contract failing with the government, AI adoption, stablecoins being increasingly important, thing after thing after thing after thing after thing. Price just isn't there yet. It's very unfortunate that price isn't there yet. But price will get there. Dude, I just think the more time we spend... Don't do this, bro. I don't want to ban you, but I feel like I'm having a good stream, and then you want to come in here and like say some bullshit. It's like... Sorry, bro. Nice to meet you, dude. The Clarity Act fixes this? Maybe. I don't think you can rely on it. It's just a time thing right now. The world is very uncertain right now too. Like, I think my focus for the coming weeks is going to be to help us understand what is going to happen with the AI trade. I mean, it's just the most important thing in the world, right? Like, that's what we're just going to be talking about, is the AI trade. What's coming? What's going to happen? Where is this headed? And I don't think anybody really knows. And I think I'm just excited about this. That every day we get to talk about these changes and like no one else knows. And so I would argue that we are like as on the ball about this as anybody. It's kind of exciting. Eileen Gu, yeah, we could talk about that. I actually like have energy right now. You want to know a funny tweet? Here you go. If this doesn't make things worse on your stance on the workforce, the scariest thing is in 4 to 5 years, we're gonna have kids on peptides, nootropics, and Claude code entering the workforce. Crazy. Imagine that. Imagine instead of iPad kids, you have fucking Claude code kids. Huh? Imagine a Claude code kid. He gets 3 years fucking old and he gets handed a Mac Mini with OpenClaw on it. And you got to compete with that kid when he's 20? Stop. You take nootropics? No, should I? I don't even know what a nootropic is. What is a nootropic? Smart drugs are natural synthetic substances that may enhance cognitive functions like memory, focus, and creativity. Don't need it. They work by increasing brain metabolism, enhancing blood flow, and modulating neurotransmitters. While some are prescription stimulants, others are supplements with potential risks, including anxiety. I'm already good off the anxiety, bro. I already got enough of that. Bro instantly knew how to spell it. W-LARP. When mom watches the stream. She would support my nootropics addiction if I had one. I'm going to make my own list about this, by the way. Anxiety is fake. No, it's not. Speller's never had a fucking panic. Speller's never laid on the floor with a panic attack before, huh? This Spiller never curled up on the ball in his bathroom before. Bro's never watched a good Alexander. Bro didn't read the Citrini article talking about anxiety's fake. Bro hasn't seen the software ETF. I want to make one of these tomorrow, by the way. Gigafucked, fucked, probably fucked. Gigafucked. Grammarly, Calendly, Miro, which we use every day. Retool, Webflow, Langchain, Writer, Harvey, Glean, Expedia, Monday. Regular fucked. Accenture, Intuit, Notion, Jasper, Canva, Alphancy, Postman, Airtable, TalkDesk, Sierra, Zapier, Replit, Solus. Probably fucked. Cursor, Pilot, Clay, Mercor. Naively seems fucked, but so competent, plugged in, they seem to be figuring it out on the fly anyways. Linear. I'm going to do one of these, but with like social stuff. Like Uber fucked. Like getting in an Uber fucked. Rock climbing not fucked. iPhone games fucked. Pick up basketball not fucked. Dating apps fucked. Drinking too much at the networking event not fucked. Not fucked. Crypto conferences fucked. Clips probably fucked. Threadguy's drawings not fucked. Tamales from the taco truck not fucked. Clips are probably cooked, I'm not gonna lie. Over the like long tail here. They're just all gonna, none of them are real anymore. Like people are gonna just tune out, I think. For now, they're good. For the next couple of years, I think they're good. It's just gonna get weird though. Like, I think you're gonna be seen as like a fucking pleb if you are looking at a screen in like 3 years. Seriously, I think you're gonna just be like permanent under. Like, the biggest tell that you're part of the permanent underclass is you're looking at a screen in like 4 years. Like 2030, if you were looking at a phone, you were just like not rich enough to get the Neuralink. Not skilled enough to be able to like working blue collar with the phone away. You're just like in the middle. Can I steal that tweet? Yeah, it's not gonna bang for you. Sure, you can have it. I'll tweet it and I'll tweet your exact tweet and just fucking tweet impression mog you right after. You could tweet it, but it's not good enough to just go viral on its own. So you could tweet it, yeah. I stole it, by the way. I stole it from somebody else, I think. Like this whole stream, I just steal shit. Like, it's like what we do. Yeah, they probably stole my other shit. By the way, last thing I want to show you guys is bro hit the 3-hour mark and said, fuck it, yeah. David Sachs banger. Oh my God. How about that banger he stole? By the way, I have a Telegram chat where I'm hyper active in the TG right now. I'm in there all day. If you want to join and like be part of where I just like schizo out all the time, posted TG clip 2 hours ago. Now it's sending. Wait, can we watch it? How do I like here? Here's a TG if you want it. I posted it all day. You guys been liking the TG recently, or is it annoying? I'll post it in YouTube too. It's been a little bit annoying, I think. I like waking up to it. What? What was I gonna say? The last thing I was gonna say. Oh my God. Fuck. I had something. What was I talking about? Screen. Stealing bangers. What was I talking about? What was I talking about? Fuck my... Oh, I found it. I think we're gonna do this thing where we start posting our Notion docs, which DNAP and Tulip King work on, and it's like my pride and joy. Okay, this post probably has like 40%. This is probably 50% of the Notion doc, max 50%. But look at this. Look how much is in here. Culture stuff, clav clip, OpenClaw, clavicular, Pete Hegseth, Kanye of software, Citrini, response, crypto's early, culture, DoorDash response, American Express dump, PayPal dump, crypto, AI. It's like 40%. We had to redact some stuff because it gets fucking edgy. But it's like it's like my pride and joy. Is this Notion and how beautiful it is. And I think we're gonna start posting it every single day. If you guys are interested in it. It's like a newsletter. Wait, I have a banger. I'm about to tweet a banger live. I'm gonna steal a banger. Wow, you guys want to see a fucking robbery in real time? Read the Poca message and then watch this. Where's the cry? Is that a banger? I wonder what Citrini finna do after this market down. Probably fuck some bad bitches. Maybe hit a money spread, flex deep out of the money puts. It's already been tweeted. Dude, 82 likes. It has not been tweeted. It has not been tweeted. No, it is not. Wait. Talking about it's already been posted, bro. Oh my god. Stop it. I wonder if it's any different to do after this market down. Probably flex and bad, but just maybe hit a money spread. Flex deep out of money puts. Maybe some 4.5% US bonds. Oh, he's so tough. He really want to see so tough. Does this make sense? The 4.5% US bonds? Is that a banger? Talk about it's already been posted. Shit got 84 likes. All right, bro. All right. And yeah, she just slept for 18 hours last night. All right, bro. All right, bro. U.S. Treasuries, maybe? I don't know, like, finance talk. Believe she's not getting clapped right now if you want to. White whale meme. All right, bro. Somebody tweet that meme right now. Believe she's not getting clapped if she want to, and it's a white whale just like... Believe she's not getting clapped if you want to. Oh my god. Dude, have I been streaming for 3 hours and 10 minutes? This is the longest stream I've ever streamed. Did you see the Jane Street news? Yeah, I covered it for a second. I didn't really I just said you know, I don't have much of a take. Fuck Jane Street, I guess. I'd like a job or a sponsorship though. So, I don't know. Everyone wants to talk about, oh, white collar workers can't work anymore. Joke's on you all because I can't fucking, I've never been qualified for a white collar job ever. All right, I'm leaving. How was the stream today? What'd y'all think today? You guys really stay the whole stream. Like, the core audience here tunes in for 3 hours a day. It's nuts. I feel like they've been getting better. Top 7 streams of all time. You said it was top 5 earlier. What happened? What happened to the other? Don't leave, man. Dude, I have to. I'm fucking so tired. I need to go to the gym. I need to go to a surgery appointment tomorrow. Bro, I'm fucking tired. Best 3 hours of the day. That means so much. I don't think you understand how much that means to me, bro. I actually don't think you understand how much that means to me when you say that. Like, I am grinding to fucking make these streams good. I don't know. This was a substantial topic and coverage. Might be best top one of the year. Top 11. I just think what we are focused on right now is the most. Oh, but when I say I love waking up the TG posts, I'm weird. Yeah. I don't know, bro. We're the only class to look forward to. I just think what we're covering right now is our little bubble of Twitter is the most interesting part of the world. Most interesting sub niche on the internet. And I don't think anyone's covering it as good as us. I just don't. I really mean that. Like, Malcolm said this to me earlier, and I've like rekindled my whole life around it, which is just like, whatever we're interested in is the shit. And if you're not interested in what we're interested in, like, what the fuck are you doing? And so I just think we're right, bro. Like, I just think we have like good focus. Like, I just think we're like on the needle. You know what I mean? I wait throughout the day for the stream. Do you actually, like, you actually do? Is this like in your calendar, or do you just like, oh shit, you got the noti, I'll pop in for a minute. There's like part of your calendar. God, it's so awesome, bro. I feel like y'all been watching for a minute too. I have my shit on the calendar. That's so awesome, bro. So low-key part of the daily routine is crypto news for me. Facts. When it's 4 p.m. I know TG streaming. Yeah, daily. I try to tune in the whole time. That's so awesome. It's 5 a.m. No way you're watching at 5 a.m. Stream is more insightful than any space on X, bro. X is ass. X sucks. Spaces sucks. I love X. Jesus. Spaces sucks. That's totally my thumbs on Saturday and Sunday. TG streams I post in her show. That's so lit. I went for 3 hours and 13 minutes. So that means tomorrow, 2 hours, 47 minutes. I don't want to hear shit. All right, I'm out. Ugh, I got to raid Rasmar. I feel bad. Good luck. Nobody ever raids me. I just got to raid everyone. No one ever fucking wants to raid me. Give me fucking 300 viewers. Good luck, y'all. Have fun. I don't know. Good luck. Good luck. I'm sorry. I'll see you tomorrow. Same time. You know where to be. Peace.